Before we start this video, do like and subscribe to our channel and not miss on any updates.
Hello, dear students. So today we are going to take up the case studies of the integrated business solution, which are going to be specifically covering the topics of advanced auditing and professional ethics. Before I get started with the discussion of the case studies from the case study digest, okay, it is very important for me to give you some kind of understanding regarding what should be the right perspective or the right way of appearing or preparing for a subject like audit for this paper IBS. If you look at the questions or if you go through the variety of case studies, you will come across a kind of understanding that the questions on auditing, which have been asked in all these questions or in the case studies, are basically about application of the auditing principles. So you don't have to have the kind of load that how are we going to remember so much content? There is so much to be remembered. There is so much detailed understanding in the subject like audit. It is so vast, so many standards. How is everything to be done all over again for the purpose of this paper? And moreover, in the examination, in the short period of time, how are we going to find out the answers for the same? Understanding here is that all the questions, like I have gone through multiple case studies, I've seen the questions appearing in the journals as well, wherein everywhere the focus is basically on the application of auditing principles in different business scenarios. So you don't have to think about when you pick up a particular standard, something very core element of the standard is not going to be asked, or something very detailed part is not going to be asked, how we expect in the paper of auditing. Here, what is the question is going to be regarding the applicability of a principle. Just to give a simple understanding to you, like suppose if there comes a situation regarding non-compliance of laws and regulation, then they are not going to ask you a specified procedure or a situation in the standard of SA 250. Basically, they'll be asking you regarding the general applicability of SA 250. So you don't have to take much load. Your understanding has to be that when you have studied the subject of advanced auditing in detail for the paper, okay, that time you have got the detailed understanding of everything. But for IBS, what you require is the general applicability of the topics, of the standards, all of those. Today also, when I pick up the case studies, I'll make you realize that they are not going to ask you something in depth or something like that, something which you will be generally understanding. Like for example, when you pick SA 250, when you pick an SAE, when you talk about an SRS, so they're not going to go into the detail of it. They'll be asking you regarding the basic applicability of the standard, the general approach of the auditor and the standard. Okay. Some core areas which you have to focus on. Why I'm calling it to be core area is because when you look at the case studies which have been picked up, okay, or where the questions are relating to advanced auditing, the questions are regarding these areas generally. So I would recommend these to be the strongest or maybe the most likely areas to be tested on. So first I would say is the area regarding the risk assessment. So risk-based audit, the risk approach, the risk assessment procedures, basically the components of risk, like inherent risk, okay, detection risk, the control risk. These are all the areas where questions have been asked, and they're focusing more on the risk-based approach or the risk assessment procedures to be adopted by the auditor. Second, applicability of auditing principles. Like basically, if a particular reference is given to a standard like a question, so they won't ask you a detailed part of it, but they're asking you in this particular situation, what is the auditor's requirement? Okay, so it is not going to be a very detailed one. It is going to be the overview of the standard has to be understood. You should be able to understand whether auditor is responsible for this or not responsible for this. One more area which is very important is regarding internal controls and the evaluation of the controls. Okay. Internal controls, as in we know, they're designed by the management for preventing detection of fraud and errors, all of those. So basically, when you talk about evaluation of the controls, there are components of the controls. The control environment is there, risk assessment procedure of the entity is there, control activities. Okay, these are the things which have been tested on. And one more important area is regarding the audit in automated environment. Okay, so if you ask me if something has to be focused on really, I would say that these four topics or these four areas have been repeatedly asked, and over a period you will see that every auditing question is somewhere or the other connected here. Also, one important area which you know as a CA final student, professional ethics is extremely important. Correct? But the idea is you have studied professional ethics so much in detail that when you look at a question, when you look at a case study, I really don't think you'll have a problem in understanding whether there's a professional misconduct or not. In fact, I'll prove it to you today when I take one of the case studies that you will realize, okay, this particular element you have discussed, and you know that in this area, in this particular situation, whether the chartered accountant is really guilty or not, you'll be able to get a hint of it very easily. And as we know, we have two types of questions here, MCQ and descriptive. MCQ, according to me, will be very clearly understandable through the case scenario which is given to us. But yes, descriptive, you require to have a good grip. And for descriptive, I would strongly recommend the areas of risk assessment. Risk-based approach, the components of risk, okay, how the auditor does the risk assessment in a given situation, what a risk is to be identified by the auditor, where should be the focus of the auditor, okay, the kind of reporting to be done, like the opinion to be given. Okay, these are the kind of generalized questions which have been picked up. Overall, when you look at the IBS structure, you will see that the questions on auditing are very, very limited. Like when you see DT, IDT, the questions are very heavy, and there are many questions. Corporate economic laws, there are many, many questions coming up. Compared to all of that, I would say auditing and professional ethics, the coverage is very, very little. Okay, and the coverage, what they have done also is the applicability of general auditing principles. So these auditing principles, I think if you have done the understanding of, auditing subject individually when you are studying, cracking your audit is not going to be difficult, because everybody has a fear of the subject of auditing. I would agree, for an individual paper like audit, it is a fear. But in IBS, you can take it an understanding or maybe a confidence booster to you that in IBS, Integrated Business Solution, this paper, the paper 6, I would call auditing to be one of the areas which you can handle, provided you have studied the subject in detail properly earlier for the main preparation. Obviously, for those who have already covered that area and have been having a time gap of 6 months, 1 year and all, then the areas which I have told you should be focused upon more. Okay, because I have seen the questions, like variety of questions everywhere. The idea is based on risk, internal controls, opinion, okay, automated environment. So basically the questions are quite similar, and obviously professional ethics schedules, I think by now you'll be knowing it. And even if you're studying for the first time, I think when you do professional ethics, your approach will be that you will be focusing more on that particular area. All right. So without any further delay, and after giving all my relevant pointers, which I really wanted to share with you, I think we'll get started. We'll be picking up the case study 7 first. Okay. And this case study you have already been discussing is a part of, IT, income tax, indirect taxes, and also corporate law, maybe economic laws. When you were discussing the case studies with the case study, you already discussed the content of it. So I'll give you the overview and then pick up the question which is pertaining to audit individually. All right. So with that approach, we are going to try covering 3 to 4 case studies today and get an understanding of what kind of questions would be there. Trust me, at the end of the session, you'd be like, yes, this particular part for audit is going to be manageable. All right. Yes. So let us get started. Let's share the screen with you. So first is the part of the case study 7. I'm obviously not going to go through the entire case study all over again, because I really believe that, okay, I believe that when you were doing the questions on DT and the questions on law, okay, I think you must have gone through in detail, but just an overview for you to get an idea of it once again, that there is a huge conglomerate, that is a big company, okay, that is Connect Group, okay, which is growing as a small sized one as a textile entity. Then there has been a significant growth. Okay, then there had been a division, okay, which was given to the two brothers. After that, this business had its major role to be played in the form of the telecommunication industry. Okay, and they developed it very well. Along with that, they also had a great competition given to all the existing players. Okay, everybody had to undergo their change in the products, change in their strategies, change in their, every single approach of the companies underwent change. There was a tough competition. They also killed a lot of players in the market. They also gave a tough competition. But yes, because it is an industry, okay, where competition has to happen, all the others also matched up with them. And very soon they had a lot of competitors coming up with all their innovative technological development, all of that. But there was one merger which apparently was planned to happen, which would fail, okay, because of which they had a very big setback and there was a lot of financial difficulty. Okay, so that was basically the idea given to us in this particular case study. Okay. Intense. Then the company had the insolvency, petition filed. Okay. Then there was a recovery of some amount and bidding was going on. So all of that, I think if you have read it through, you must be knowing it. Okay. You must have read it in detail also. Okay. However, I'll pick up the question which is based on audit, and relevant part of that we'll be discussing all over again. Okay. So if you look at here, you look at this. In the entire part, the question number 5, MCQ it is, okay, is talking about the question of audit here. Considering the financial distress faced by Connect India, which risk factor should auditor prioritize during the audit engagement? Now understand, here the company is facing financial difficulty. Obviously, if they don't show the financial position of the company good, then in that case, they'll not be able to raise the amount. They'll not be able to bring that kind of amount required. They'll not be able to meet the requirements. Bankers or any of the other bidders would not be interested in investing. So there could be a possibility of losing a lot if their financial position predicted or depicted would be bad. So obviously there is a highest possibility here that the risk which the auditor has to focus upon is going to be the risk that their financial statements are wrongly presented. Why? Because their financial difficulty, there is a possibility that they will be giving wrong information to the users so that they conceal their real picture and show their position to be very good, so that people again believe, and there could be some kind of investment done or some kind of amount which they want to raise, they'll be able to get it from the market. So here, if you look at it, the risk of inventory obsolescence would absolutely not set in here. The risk of fraudulent reporting to mask the financial difficulty. So obviously here, the focused area that you're going to look at it, that is the auditor is going to focus on which risk? The risk that there is going to be fraudulent reporting. Why? Because they want to cover up their situation. The situation is actually very bad. They have financial difficulty. But if they project this in the public, then obviously people will not be interested in investing, or they'll be not ready to take this kind of risk. And so because of that, there is a possibility that this company is trying to cover up the situation by adding some kind of fake numbers or maybe showing some kind of wrong statements. There could be some or the other fraudulent reporting to be done. Maybe aggressive estimates are used, or maybe overvaluation of the assets is done. Liabilities are hidden. Okay, there could be some kind of provisions which are wrongly quoted. Okay, there could be something like that. So here, the question is straightforward regarding the risk factor which the auditor has to focus. Apparently, I don't think there could be a doubt regarding all the others, because non-compliance of labor law, they have not shown. Okay, they have spoken about that very much in detail and appropriate. There was a layoff and all that. The risk of inadequate documentation of fixed asset impairment. So regarding that also, the discussion is not highlighted in a negative perspective. But yes, there is a possibility of fraudulent reporting because they have financial difficulty and they're trying to cover it up. Okay, they could cover it up. You're not saying they're trying to cover it up, but they could cover it up. So it is the responsibility of the auditor to scrutinize the financial statements in detail and check if there is any kind of fraudulent reporting done. For this, he has to check in for all the assets, liabilities, all the hidden liabilities, overvaluation of the assets, estimates, provisions, all of these things, whether there have been aggressive estimates, accounting policies are properly taken or not. All of these have to be taken into account. Okay. So if you look at it, here I've just given a simple understanding. So you can see the question number 5 was based on audit risk. All right, so here it is. Risk of fraudulent financial reporting. So just for you to get an idea. Yes, simply for you to get an idea, I've given you some kind of examples also here, like check for unusual transactions, aggressive accounting estimates could be there. Transactions near the year end could be manipulated by them. Controls mechanism has to be checked because there could be, and we could say that there is this kind of collusion among the employees, or there could be some kind of controls could be overridden. Okay, that also could be possible. So there is a risk of fraudulent financial reporting in the given case study. All right. So that was a simple question regarding audit here. As I told you in the beginning itself, that the questions will be focused on more regarding risk-based approach. So here I've proved it to you that one of the areas which is major for your understanding is the risk factor. The auditor should prioritize. Correct? All right. Now after this, we'll pick up the next case study. This was quite simple. Okay, next is case study 15. It's page 175. Just one second. All right. Now case study 15. Let's do it. I'm very sure you must have gone through this case study also in other sessions, but a little bit detailing will be doing it here. So it is regarding an NGO, and in the beginning parts, they've simply given you regarding the role of NGO in the country. Okay, what role they play, how the stakeholders are affected by them, how are they contributing to the general public, citizens development, okay, all of those things. Okay, so first 2 paragraphs are just regarding NGOs, how they're operating in the country. So let's not read that. Let's come to the next part. Now look at this very carefully. Foreign contribution in India are regulated under Foreign Regulation or Foreign Contribution Regulation Act 2010. The objective of such a law is to regulate the acceptance and the utilization of foreign contribution or foreign hospitality by certain individuals or association or companies, and to prohibit acceptance and utilization of foreign contribution or foreign hospitality for any activities detrimental to the national interest and for matters connected therewith or incidental thereto. So basically we have this act. Okay, so whenever NGOs, trusts are receiving any money from the foreigners, okay, foreign citizens, foreign body corporates, then in that case, the amount that you're going to receive, okay, it will be highly regulated. So how much you can receive, how it can be used, okay, where are you using it? For everything, there are regulations made by FCRA. That's why they have made a regulation based on it. And more importantly, understand there'll be certain ban on the amounts or the activities which could be detrimental to the interest. So for that, we have FCRA regulations. So here they're talking about one of the client, which is a DSB Trust, okay, which is one of the organizations working for the preservation of ecology and environment. Okay, so they are one of the NGOs. And they're saying it has been working on environmental issues since last few years and very vocal and prominent in raising the issues. However, the trust is overzealous in its approach and has sometimes been accused of stalling, that is stopping crucial development projects in guise of protecting the environment. It also receives substantial foreign donation from overseas agencies, trust and its well-wishers, and such donations are the main source of funding. So you have to understand this area, okay? Its main source is what? That you're getting donations from the foreign countries, correct? From the overseas agencies. There could be foreign trust, it could be foreign body corporates, it could be foreign trust, they have the well-wishers there. And the main source of the money receiving here is what? The foreign money that is coming in, the foreign contribution. Okay, now the office bearers, that is the people who are taking care of this fund, okay, met on 25th March 2023 to take a stock of the situation because there has been an amendment in FICRA, that is FCR has gone under amendment. Okay, and Mr. X, one of the office bearer, has given an understanding regarding the compliance burden and changes in the manner of receiving foreign contribution. So now, because there has been a change in law of FCRA, now there is an idea that the foreign contributions that you were receiving earlier, now there have been more stringent provisions and regulation of the manner that you're going to receive it, and also how much you're going to receive it and where you're going to apply. Okay. Also understand, earlier FCRA registration has undergone a change and it's going to expire very soon. And they have decided that it is going to, the foreign FCRA registration of the trust is going to expire on 31st of December. Okay. Then another office bearer, okay, who is herself an activist, pointed out that legislation has been tightened. News around NGOs receiving foreign contribution, making it difficult for them to undertake certain types of works and incur certain expenses due to restriction being made more stringent in the respect of utilization of foreign contribution. So this new amendments which have happened in FCRA, these are going to catch those particular NGOs which are receiving foreign contribution majorly, and they are tightening it. Tightening as in they're making it very, very strict of how you're going to receive it and how you're going to spend it. Now understand, for this particular trust, the major source is what? Foreign contribution. So for them, this is one of the areas where they're going to worry about, correct? She is of the view that expenditure relating to writing and filing reports is directly related to the trust activity of preserving ecology and environment and may be out of the purview of regulatory restriction. However, she is unsure about her stand and its legal implication. Okay, then Mr. Y also agreed with both of them and a point that field programs cannot be run without system and procedure in place for supervision, management, policy design, and strategy. So basically, he's worried about having a new set of internal control mechanism where all of these things have to be set up now. He has heard about changes in rules relating to transfer of foreign contribution to other NGO. Now, in the new amendments that have happened, or the amendments that have happened, okay, now NGOs are not allowed to transfer their foreign contributions to other smaller NGOs. Okay, there has been a change. And this NGO was actually doing it. Okay. About 5 years ago, the trust had transferred foreign contribution to smaller NGOs, having better reach to the intended beneficiaries of program run by the trust. The offer bearers were in a fix whether foreign contribution received can now be transferred to NGO for running programs or not. So now with the new changes, will they still be allowed to transfer the amount or not? During the meeting, Mr. Z also chipped in. He also reminisces that there has been changes in the rules pertaining to registration of charitable trust. So this is all regarding the income tax law, that under the income tax law, now there has to be a fresh registration to happen. Okay. So all of that. And besides, the trust is planning to sell during financial year 23-24 immovable property. And against it, they want to purchase another capital asset. So basically, they're going to discuss about tax implication here. Okay, now comes the important point for us. The trust has recently appointed their new auditor and tax consultant, CA Madhusudan. Mr. Z is of the view that they should consult their tax consultant in respect of these matters for necessary guidance. CA Madhusudan has also to audit accounts of foreign contribution for the year 23-24 and has to certify various figures pertaining to brought forward contribution at the beginning of the financial year. So this is as the auditor, he's going to take care of the financial statements audit. And it is the first time he's going to do the audit. So all the brought forward contributions and everything has to be checked. Foreign contribution received during the year, interest accrued on foreign contribution, balance of unutilized foreign contribution. So basically opening balance, addition, utilization, closing balance. All of that is what he has to check. Further, utilization of foreign contribution received for the purpose for which trust was registered is also required to be certified. Besides, he is also required to express an opinion on the financial statement of the trust for the financial year 23-24. Based on the above case study, answer the following. So here the things have been given about a trust which is completely focusing on foreign contributions for their sourcing. That is, the funding that is going to come to them is from the foreign contribution. We know that there is an act called FCRA 2010 which is going to govern all the foreign money. Okay, so whenever contribution comes from foreign countries, then this is regulated as to how much you can receive, mode of receiving it, and utilization of this. Because there has been amendment, there is going to be a scope, there is going to be a change in the registration process. There is going to be a change in the applicability. There is going to be a change in the certification. There is going to be the change in the usage of the amount, the quantum that you can receive. Okay, then regarding utilization in which areas, transferring of the amount to other small NGOs. Okay, all of these are undergoing a change. So this trust, because it was receiving foreign contribution, now with regard to the new amendments, okay, the questions have been raised. Here, the questions that we have about audit are not pertaining to, MCQs here. So all MCQs are basically the law things, okay? So everything is regarding law and income tax basis, okay? So those things we're not discussing. We'll come directly to the question which is based on audit. And here we have a descriptive question, okay? If we look at the 7th question, A and B, both are on audit. So what is the question? Look at this. On the basis of overall description of a case study, what factors should be considered by CA Madhusudan while assessing, again look at this, audit risk of the DBS trust during the course of audit of financial year 23-24. Okay, now you have to think, analyze, and then come to a conclusion regarding what could be the discussion here regarding the audit risk. They are telling us on the basis of overall description of the case study. So we have now understood the entire case study. Okay, new law, there is a law which is directly impacting on this particular entity because they're receiving foreign contribution, correct? There has been an amendment in the law because of which a lot of things are undergoing a change. There is a requirement of designing a new system of control mechanism because of the stringent rules and regulations, correct? So you know all that. Now understand. So they're telling on the basis of the overall description of the case study, what factors should be considered by CA Madhusudan while assessing what? Audit risk of DBS trust during the course of audit for the financial year. So now audit risk, all areas we have to assess. Now just think, when you studied audit risk, SA 315, okay? In audit risk, we study 3 components. The 3 main components of audit risk are which one? We have inherent risk, we have control risk, we have detection risk, correct? 3 risks together makes it what? Audit risk. Inherent risk, control, detection. In this case, if I want to overall assess the audit risk, I need to identify these 3 components only. So now let us pick up the inherent risk. What is inherent risk? That whether you want it or not, this risk is going to be present. Risk is what? Possibility of error. So susceptibility of the account balances, class of transaction, that is account balances at the balance sheet items, class of transaction like P&L account items, notes to accounts disclosure, these are going to have errors because of these kind of risk which are being present. Those we call to be what? Inherent risk. Here understand the inherent risk is very obvious. What is the risk involved here? The foreign contribution. You are receiving foreign contribution, that is the money is coming from foreign countries. So don't you think a risk is here automatically present? That means the people who are going to receive it, okay, these people have to be people of highest integrity. They have to be accountable. They should be able to understand that the amount received has to be properly accounted for. Their integrity is one of the major area of risk. Utilization of this amount. Money laundering activities can happen because the amount is coming from foreign countries, where they're getting shifted, how it has been traced, all of that has to be understandable. So because it is a foreign contribution received, the very risk comes from there. So don't you think the first inherent risk that we can pick up out here is that it is a foreign contribution? So basically, there is going to be an associated risk that there is a possibility of the people who are handling it could manipulate it. Money laundering activities can take up. Tracing of the money could not happen. Utilization could not happen. People could be fraudulent who are handling this. So they could, move in the money here and there. So basically, inherent risk is very simple. Foreign contribution involved. Lot of risk regarding the people who are going to handle it. Second, control risk. Understand it is a new regulation. New regulation means there has to be a change in the system. So you should have such controls and procedures in place which will be able to identify and understand the new laws to be applied. So there has to be a proper design, implementation, and operating effectiveness of the controls present. Systems and procedures have to be so strong that you should be able to comply with the laws and regulation. Understand, if you're not able to comply with the laws and regulation, you have a chance that the FCRA license will get cancelled. And if the FCRA license get cancelled, you will not be able to receive foreign contribution. And here, foreign contribution is the main source of the funding of the trust. So don't you think a very big risk involved? Yes. So control risk has to be checked because internal controls have to be strong. The design of the control, the implementation and the operating effectiveness of the control regarding how the systems and operations are for compliance of laws and regulation have to be checked in. So control risk. And third, you have to think what could be the third element, detection risk. And is there going to be a detection risk here? And if there is a detection risk, is it going to be less or high risk, lower or higher risk? If you think very much closely, I had highlighted also when I was reading, I stressed on that particular sentence. They appointed new auditor. Now tell me, when new auditor is appointed, don't you think in the first year of audit, there is going to be a detection risk which is going to be very, very high? Yes. Why? Inappropriate audit procedures that could be followed. Samples chosen could be wrong. Because we know when you're recurring, you are the recurring auditor. So you have done the audit previous year, before that also. Then basically you get the idea of the business environment properly. You know what are the risks. You know which areas to be focused on. Unlike the first time auditor, who would be completely new to the scenario. So there is a possibility that he could not be able to find out the areas where he has to focus appropriately. So there could be inappropriate audit procedures adopted, or there could be a possibility of wrong samples to be picked up. So because of that, detection risk is also there. So here understand, now if you look at all the discussions that we have done, on the basis of overall description of the case study, what factors should be considered? So in inherent risk, what is the risk element involved here? Foreign contribution. Control risk, systems and procedures have to be with regard to compliance of laws and regulation. Third, detection risk, new auditor. So highest possibility of detection risk because wrong procedures could be, wrong samples could get selected, correct? So this is the way in which you have to pick up all the three elements of the audit risk, and one by one you have to explain them in detail in the given scenario, which elements are focusing on that particular risk. All right, then we'll read the answer given here, but I want to do the second one also so that we can look at the answer clearly. Assume that during the course of audit, CA Madhusudan suspects that there may be non-compliance by the NGO in relation to some aspect of FCRA 2010. How should he proceed? As soon as you look at the non-compliance of law, which standard strikes your mind? Everybody has to think quickly. Which essay comes in your mind? Okay, if you think closely, you will suddenly remember essay 250. Consideration of laws and regulation in an audit of financial statement. So we know that compliance of laws and regulation is the responsibility of the management. An auditor has to ensure that those financial statements which have or those non-compliance of laws and regulation which have a direct or indirect impact on the financial statements will be our responsibility also to assess whether management has complied with them or not. So here auditor has a suspicion that there has been a non-compliance. So SA 250 very clearly says when there is a suspicion regarding a non-compliance, then what is the auditor required to do? That first, he is going to discuss this matter with whom? He will discuss this with management. And where appropriate, to TCWG. Correct? Management and TCWG. Suppose if they are not giving you the proper answers or insufficient understanding is coming from their end, then you will look in for legal advice regarding the laws and regulation. If that also doesn't work, then we consider this to be insufficient audit evidence. That means we don't have sufficient and appropriate audit evidences. Then what is the idea? That if you don't have sufficient appropriate audit evidence, and along with that, you also look at your other risk assessment procedures, the reliability of the written representations given by the management, take into account all of these areas, and based on that, you'll be able to look at the impact on the opinion also. So very simple, if there is a suspicion regarding non-compliance, this discussion obviously will first have with the management TCWG because it is their responsibility. They are responsible to give us the answer. Second, if they are not giving, you obviously will take the external advisors. That is going to be the legal advice from the legal counsel. If that also you believe to be insufficient, then in that case, you're going to understand the impact of this on the audit report because this is as good as you have not obtained sufficient appropriate audit evidence. But then we need to understand regarding the opinion, whether it is material and pervasive or not pervasive. So because of that, you look at all the other aspects also, like risk assessment procedure, what is the outcome of it? the reliability of the already available evidences like written representations obtained from the management, take into account the overall understanding, and based on that decide what will be the ultimate opinion. Clear? All right. So now with all this that we have done, let us look at the answer. So it is question number 7. Okay. So now audit risk here. Okay. Exactly the pointers that we picked up, you'll be able to highlight it. Okay. So if you could look at this for the assessing of audit risk. Okay. Look into all the components. Look into all the components. Okay. So which are the components? Inherent, control, detection. So here you can look at this. It may. Okay. Here, and examine all the components. DBS trust is in receipt of substantial foreign contribution that we have understood. It may make transaction inherently risky. So foreign contribution by itself is an inherent risk for them. The credibility and integrity of person behind NGO is important because they are receiving the money. So there is a possibility of them manipulating it. So they say they could be involved in money laundering activities or they be misutilizing the amount. So this is regarding the first component, that is inherent risk. So it's focusing on the people who are going to receive it. Second, they're also telling that the auditor needs to assess whether trust continues to comply with the conditions for the registration, that is legal compliance. Non-compliance of FCRA can make the activities very risky. It could have a serious implication on the trust as it could lead to cancellation of FCRA certificate and other regulatory like penalties and all could be there. And if foreign contributions are not received only, because FCRA, if the certificate is cancelled, then obviously you cannot receive foreign contribution. If it is cancelled, okay, then you will not be able to run the activities because your major source of funding is foreign contribution. Therefore, it requires proper assessment of control risk, that the control system and procedure are operating effectively to comply with the provisions. Understanding? So basically control system and whether they're designed, implemented, and they are operating effectively. Okay, to comply with what? The provisions of FCRA. You can understand how serious it is. There could be irregularity and problem could come up. And finally, third component is what? Detection risk. So the auditor is conducting audit of trust for the first time. So don't you think there is going to be a possibility of inappropriate sampling procedure, faulty application of audit procedure, because the business environment new, control environment new, people are new, the client is completely new. So basically, don't you think in your first time approach, there could be a possibility of mistake? So there is higher detection risk. The auditor might fail to identify the risk of material misstatement even if it is present. Why? Because of wrong samples or faulty application of the procedure. Got it? So that is the thing. Then one more question which was there here was regarding, I told you, you have to, the standard is very clearly identifiable, 250, which is consideration of laws and regulation, okay, in the audit of financial statements, where the auditor is suspecting here there is a non-compliance. So what will he do? He'll discuss the matter with management and where appropriate with TCWJ, correct? But if they don't give the answer, if they don't provide sufficient information, then the auditor believes that the suspected misstatement is material on the financial statement, then he shall consider to obtain legal advice. But after that also he believes if the sufficient information about suspected non-compliance still cannot be obtained, then what will he do? He will consider it to be a lack of sufficient appropriate evidence, okay? And the impact on that on the auditor's opinion. But obviously we need to understand what kind of opinion to be given. So other aspects also we have to consider to understand the pervasiveness. So because of that, we have to connect it with other matters like auditor's risk assessment, reliability of written representation, and then take appropriate action. So don't you think if the base concept of the, applicability of the standard or the risk-based approach, if the components also you understand easily, like simply, in a very simplified manner also, this kind of descriptive you'll be able to handle, correct? So that was regarding the question on the case study 15, okay? All right. So just quickly, you can see here, so it is case study 15. It's a descriptive question, 2 questions 7A and B. First question is discussing regarding the components of audit risk, which is inherent risk, where the major criteria was the foreign contribution. So the people here, their credibility and integrity would be risky. Control risk, compliance with FCRA, not only registration, but also all the compliance of laws and regulations coming with it. Others, there will be a cancellation of the license, and because of which foreign contribution will be eliminated. You'll not be able to receive. The detection risk is because there's a new client, inappropriate procedures could be there. 7B is regarding 250, okay, where you have to communicate with management, TCWG. Otherwise, you have to take the legal advice if they don't give the answer. If that also is not possible to give you enough information, then you have to understand the impact of that on the risk assessment procedures, reliability of written representation, and based on that, you will be giving impact. Or maybe you could say the opinion. on the report. Clear? All right. Yes. Okay, so we have finished case study 15 here. I think it was quite manageable. Let's move on to the next one. That is going to be page 243. That is case study 22. Okay, let's read this. Okay, now. So case study 22, we'll do it slowly because I believe the about two case studies which I went a little fast in reading perspective was because you already had done other questions there. So you must have gone through it. Let's do this in detail and understand it now. Okay. So now case study 22. Mr. Manish, registered under GST, is a chartered accountant, resident of Pune. Manish has received a technical consultancy service for his business from his brother, Gaurav, who is well settled, financially independent in Canada. So he is a chartered accountant receiving technical consultancy from his brother. Okay. His brother did not wish to charge any consideration from him, but the same, obviously brothers. But on the insistence of Manish, he charged 20,000 Indian rupees from him. However, for the same work, he's charging 2 lakh. Okay, from the others in India, for the same kind of work, he's charging 2 lakh. So basically, ALP is 2 lakh here. Further, one of its client, Mrs. Gupta Sweets, a store located and registered under GST in Maharashtra, had come out with a big discount offer at the time of Diwali on various gift items. So obviously, these questions are going to be GST based, but we need to read it properly. In order to attract more customer, it had decided to supply a gift pack containing 5 packets of Ladila's Namkeen, taxable at 12%, 1 packet of roasted smoked almonds, 100 grams, taxable at 18%, 1 packet Conville chocolates, taxable at 28%, 1 bottle of Teal fresh juice, taxable at 18% in a single basket for a single price of 600. Okay, this I think when you do GST case studies, you'll be able to tackle this particular paragraph very easily or with the help of the faculty. Okay. Yes. Mr. Manish provides management consultancy and internal audit services to his clients. To understand, his core area is management consultancy and internal audit service. During 2023, looking to the growing needs of his client to invest in stock market, he also advised them on portfolio management service, whereby he managed portfolios of some of his clients. So portfolio management, we know, we study professional ethics, we know we are allowed to do this. Looking at this expertise in financial management, Mr. Jaman, a student of Chartered Accountancy course, is very much impressed with his knowledge. He approached Mr. Manish to take guidance on some topics of financial management subject related to his course. So basically FM classes, okay, financial management subject. Mr. Manish, on request, decided to spare some time, okay, from his work to provide classes to Mr. Jaman along with some other aspirants for 3 days in a week and for 1 hour each day. So he is going to teach 4 students for 3 days in a week and 1 hour in a day. So basically 3 hours. Okay. However, he had not taken any specific permission for private tutorship from the institute, that is council. Mr. Manish was appointed as the internal auditor of Kapoor Pharma Limited, a company engaged in manufacturing of medicines in Pune, Maharashtra. As a company was required to appoint internal auditor. As a company is required to appoint internal auditor as per the requirements of Companies Act 2013. So it comes under section 138 of the Companies Act. So based on that, they require to appoint internal auditor. The company is registered under GST in the state of Maharashtra. All right, then. After that, the company was founded in 2014 by Dr. Rajesh Kapoor, a physician and entrepreneur. Okay, then they're given all the history regarding Mr. Kapoor. Okay, what type of medications he comes up with, affordable high quality medicines in India. Was founded as Kapoor Pharma Limited to meet that need. The company has grown rapidly since its founding and now employs over 200 people. They also have a health clinic named Kapoor Health Clinic. They provide for subscription programs, okay, where you can avail multiple facilities by monthly or annual fee. Okay, then BMK and company was appointed to conduct statutory audit of Kapoor Pharma Limited. The engagement partner of the firm, Mr. Rajan, asked Mr. Manish to provide direct assistance to him regarding evaluating significant accounting estimate by the management and assessing the risk of material misstatement. He also sought his direct assistance in assembling the information necessary to resolve exceptions in confirmation response. So this is basically using the work of the internal auditors in getting direct assistance in the work carried on. Okay, because Mr. Manish is the internal auditor, right? So statutory auditor is taking the assistance of the internal auditor, and by SA 610, we know it is allowed. You can take a direct assistance of the internal auditor, provided you have to fulfill certain criteria of having some letters signed and all. Okay, we study that in detail in SA 610, using the work of internal auditor. He also sought his direct assistance in assembling the information necessary to resolve exceptions in confirmation responses with response to external confirmation request and evaluation of the result of external confirmation. So basically, for the processing of external confirmation received, okay, they have taken the assistance of the internal auditor. Then there has been a new project which has been talked about expected NPV and the standard deviation. They have asked Mr. Manish, the internal auditor, to help them understand regarding the project appraisals, okay, in the inflationary conditions, that is inflation period, how will the project look like, or how the inflation will impact on the project. Then it's all regarding leaves, okay, for the employees. So basically it's all regarding the leaves, encashment and everything. Okay, so this will not read it because it's all regarding the leaves, paid leaves and all that, unused 6 leaves. Okay, number of employees, how many days leave is allowed, then the average of the leave taken by the kind of employees. Okay, all of that. Then there has been a survey conducted by the assessing officer, so whether it is proper or not. Then regarding their producing, about their production environment has been discussed here, regarding what kind of machines they're using, and also regarding the outcome of the machine and all the working capacity of the machinery. Okay, and they've given all the details regarding breakdown, standard cycle time, quality loss due to scrap, total quantity. So basically regarding the production, they have given a detail. Okay, I'm not focusing this much upon, because I don't think auditing questions will be based on this. So not the first, second, third. Okay. So there is one question here which has come from audit. So I think the entire case study also, if you would have not read, okay, you would have saved a lot of time, because the question is purely based only on professional misconduct. Okay. So here for professional misconduct, the question is whether Mr. Manish is guilty of professional misconduct in providing private tutorship to Mr. Jaman along with some other aspirants for 3 days in a week and for 1 hour in a day in the absence of specific approval. So they're talking about okay, you only have to recollect the particular provision or maybe the guideline. Okay, so we have a council guidelines, so basically regulations. Okay, so we know that there are certain things, okay, beyond the profession of chartered accountancy that we are allowed to practice. But for some, we require the specific permission coming from the council, that is ICAI, or we have been given some general permissions from the institute that some things we can do. Okay, so if you can recollect, okay, you should think about this and give the answer. When you do the topic of professional ethics, okay, we discuss about this regulation 190A. Okay, more precisely, if you want to know where it has been discussed, it is the clause 11 of part 1 of first schedule. Okay, where a CA in practice is deemed to be guilty of professional misconduct if he engages in any business or occupation other than the profession of chartered accountancy or chartered accountant, except with the prior permission of the council. That means you cannot enter into any other profession or business, okay, without the prior permission of council. There we know that council gives us 2 kind of things. One is a general permission, that is these things you can generally do without the specific permission required from council. And for some activities, you require to prior take permission from the council and then you're allowed, which you call it to be a special permission. Okay, so if you remember the regulation 190A, one of those general permissions given are with respect to what? Private tutorship or part-time teaching in the teaching organizations by the institute. So in the institute, if you're doing a part-time coaching with those organized by the institute, or if you're doing a private tutorship, okay, these will be generally allowed. Okay, but then understand there is a condition given there. Try to recollect. Okay, just try to deeply think that when you do private tutorship under the general permissions given by the council, there is one more condition attached for private tutorship. And if you remember, the private tutorship condition is that in a week, okay, directly teaching hours that you're going to give should not be exceeding 25 hours in a week. If this condition also you fulfill, that is private tutorship, plus it should not be exceeding 25 hours directly relatable to teaching, then in that case, this will be considered to be what? An acceptable thing. Okay, and you'll be allowed. So in this case, if you look at it, they are telling he's taking 3 days in a week for 1 hour in a day. That means he's taking basically how much? 3 hours per week. Okay. Second, it is providing private tutorship. It is regarding the course of chartered accountancy only, correct? Because financial management is what they're asking about here. Plus 3 hours. So private tutorship agreed, course agreed, plus 3 hours. That is not exceeding 25 hours in a week. So when all the conditions are fulfilled by him, do you think he's guilty of professional misconduct? And for the clause to be referred here, just for your understanding, I've given here clause 11 of part 1 of first schedule, because in the options that is not mentioned, but just for you to get a backdrop of it, or maybe a proper understanding from where we study, I think the clause number reference is important. So look at this. Here the questions, the options are: Mr. Manish is not guilty of professional misconduct as he's teaching within prescribed hours that is not exceeding 25 hours a month as per the regulation of 192A. First of all, regulation is wrong. 25 hours a month is not the criteria. Mr. Manish is not guilty of professional misconduct as he's teaching within prescribed hours that is not exceeding 25 hours in a month as per regulation 190A. Again, no. Mr. Manish is guilty? No. He's not guilty only. Mr. Manish is not guilty of professional misconduct as he's teaching within prescribed hours. Yes. That is not exceeding 25 hours a week and the regulation is 190A. So the right answer is D. Okay, just to make it more clear to you, let's look at the solution. Okay, look at the MCQ here. Okay, answer is D. Mr. Manish is not guilty of professional misconduct as he's teaching within prescribed hours that is not exceeding 25 hours a week as per the regulation 190A. Okay, 192A should not talk about the partnership entrance and all that. That is different. Here we're talking about what? The profession to be practiced, where you require either specific permission or general permission. So you know there are certain lists where general permission is given, but there are certain where specific permission, like for interest in the businesses of the family and all, you require specific permission. Correct? So basically, you have a list given there. So based on that, this particular private tutorship and a part-time coaching that you do with the institute, okay, this requires this is a general permission granted. But for these things, they've given a limitation on the number of hours that you directly attribute to teaching. Because if you want to do the attestation service, that is, do the auditing services, then in that case, compulsorily, you should not cross 25 hours a week. So it's not guilty. So understand here, the council has passed a resolution under regulation 190A. That is one reference, granting general permission for what? Private tutorship and part-time tutorship under coaching organization of the institute. So with the institute, if you're doing the private coaching and you require specific permission for part-time or full-time tutorship under education institution other than the institute. So if you're doing a private or with any other organization, then obviously you require to take a specific permission. Such general and specific permission granted is subject to a condition that direct teaching hours devoted to such activity should not be exceeding should not be exceeding 25 hours a week. Okay, in order to take attestation services. Attestation function means auditing services. Correct? So if you want to do certifications and all, then you can't exceed this. Okay, so that is the idea. So I think if you know the regulation correctly, the number and the condition along with the general permission, you'll be able to answer this very easily. So look at that. The MCQ 22. Okay, page 243 is MCQ is answer is not guilty. Reason is what? Clause 11 of the part 1 of the first schedule. Engages in business or profession other than profession of chartered accountants, except with the permission of council. So council gives you two types of permission, general and special permission. So private tutorship and a part-time coaching under coaching organization of the institute is generally permissible. Condition should not exceed 25 hours in a week, direct teaching hours. Correct? That is the understanding. So in the given question, the answer is D, not guilty. Clear? All right. Okay, so let's take one more here. So we'll pick up case study 25. Okay, and in the case study 25, we will focus on the auditing area. Okay. Okay, just to give you a synopsis of this, case study 25 is talking about basically a hotel which has been run by 3 partners. Okay, and these 3 partners have now realized that there's an importance for growth and all. So they're having a meeting wherein they're discussing about the new projections. They're trying to understand the new areas where they can grow. They're trying to understand how they can increase on the profits. They're trying to scale up their businesses. So a lot of information is given regarding this food joint, which is Fresh Foods, which is a very popular joint in Bangalore. 3 partners, Ajay, Biren, Chand, all of those. Okay. So a lot of details have been given. Okay. General survey is telling that the basic idea is they were provide serving with unhealthy food in a single platter. And because of that, there was a customer aversion where they were not okay with, this kind of food. So they had to bring a changeover in the dine-in menu for them. And because of that, they came up with new strategies, new plannings. Okay. In that, they've given a detailed discussion regarding what all partners are discussing. Okay. All right. Now, we'll pick up the question which is on audit-based point. Okay. So there is one MCQ here based on audit. Let's read it first, okay? Okay, for this MCQ, basically, you don't even have to read the content of the case study. It is very easily manageable, actually. Okay, so I'm not going to reading of the case study in detail, only because when you look at this question, okay, you'll believe that for this understanding, you don't even have to understand the content of the case study. Not required. So look at that. Fresh Foods has approached Indie Bank Limited for a term loan of 5 crores. I told you, they're expanding the business. They're coming up with innovative ideas. They want to have a better scaling, better sales, change in their menu, everything. Obviously, expansion, so loan will be required. So they've come up with a approach to the bank for a term loan of 5 crore. For this, they need to submit prospective financial statements. Fresh Fruits have approached CA Anil for examination of prospective financial statements that has prepared. So they have approached CA Anil for examination of prospective financial statements. Which of the following statements is not true regarding examination of prospective financial statements? So understand here, they are asking the company to the hotel, okay, to give a prospective financial information. All right. So here they're telling CA Anil, the chartered accountant, has been appointed for the purpose of examining the prospective financial information. They are telling you to find out the one which is not correct with respect to this particular approach of the auditor or the chartered accountant, we can say. So they're not true. Now remember, when you study the other standards, other than standards on auditing, you talk about SAE, Standards on Assurance Engagement. Okay, so we have SAE 3400, Examination of Prospective Financial Information. In the beginning, I told you very clearly that the questions will not be like detailing or picking up some very detailed content and all that. No, they'll be asking you the general applicability of the standard. Same approach here, same way they have questioned here. They have given you the applicability or for us to understand whether we really get the concept of the examination of prospective financial information or not. So the question is basically directly on what is SAE 3400, what is the approach of the auditor, and what has he to report on. So a general understanding has been questioned. So here they're preparing prospective financial information. That means hazard and historical, futuristic, for the projections to be done. The futuristic cash flows, the futuristic financial statements are prepared, which have been brought to CA Anil for the purpose of examination. Now tell me, in this case, okay, with your knowledge of SAE 3400, that is examination of prospective financial information, can we give an assurance? Can we give a guarantee? Can we give an opinion on the appropriateness or maybe the accuracy of this data? Can we give reasonable assurance on all this? The point is no. Prospective financial information, by the very name you understand, they are not historical, they have not happened. They are futuristic. And we know very well when something happens in the future, they are highly uncertain. So basically, all the futuristic data the management is going to prepare based on certain assumptions, correct? Certain studies, estimates. So basically, as a chartered accountant, when this assignment comes to me, my duty is I'm going to check whether these particular, calculations, the particular assumptions, the estimates, okay, whether they are reasonable or not. And here the assurance that I'm going to give is not going to be a high level of assurance, not a guarantee. I am going to give a limited assurance. It is a limited assurance engagement where I'm not expressing an opinion based on how good things are, or I'm not going to vouch the accuracy. I'm simply going to express an opinion which is going to be a very reasonable, a limited assurance. On what? That too not on the correctness, not on the accuracy, on the assumptions underlying. Not only the assumptions, but also whether they are presented properly or not. So as a chartered accountant, when this assignment comes to me, my understanding would be only with regard to first one, you should understand the focus is SAE 3400. Second, it is not historical financial statements. It is prospective. So it is what? Future. And because of which we know it very well, it is uncertain. So obviously we cannot vouch the accuracy or appropriateness and all that of the financial statements. So only thing what you are going to give opinion on, that too limited assurance, is on what? Appropriateness and reasonableness of what? Estimates. Or maybe we can say assumptions underlying for the preparation of the prospective financial statements. Along with that, whether they are projecting correctly or not, that means they are prepared correctly or not, the disclosure, the presentation is correct or not. So my things are going to be only for two. Assurance on appropriateness and reasonableness of the accounting estimate, and also whether they have been properly disclosed, that is presented or not. Only two things. So I'll not vouch the accuracy, not vouch the correctness of it. All of that is not allowed. Also understand a company's statutory auditor can also be appointed to audit this kind of prospective financials. Audit in the sense we are going to give limited assurance only here. All right. So now look at which are the options which are not correct. Okay. CA Anil need not be the statutory auditor of Fresh Foods to accept the engagement to examine the prospective. So allowed, it could be an outsider also. So not required, the company statutory auditor only will do it. So it's correct. Okay. Need not be. Next. CA Anil can express an opinion on whether results shown in the prospective financial information can be achieved or not. So is he going to give an opinion on whether the results shown can be achieved or not? No. Okay. Can CA Anil, so this is not correct. CA Anil can vouch for the accuracy. This is absolutely wrong because it is futuristic, uncertain. So you can never vouch for accuracy. That is not possible. Then CA Anil should consider the sources of information considered by the partners for the purpose of preparing prospective. That is nothing but underlying assumptions and all that. Their adequacy, reliability of the underlying data, including data derived from the third parties, such as industry statistics, to support the assumption. So don't you think this point is actually the work of the practitioner here? So the auditor basically does this. He's going to look into the underlying data. He's going to check whether assumptions are proper. He's going to check whether they are reasonable. The data that they have obtained for the purpose of preparing of the futuristic financials are reliable, adequate or not. So first point is obviously correct. Statutory auditor did not be the one. Then fourth is the actual procedure in SAE 3400. So what is incorrect is the option 2 and 3, because we neither tell whether it is going to be correct or not, nor we are going to vouch the accuracy. Both are not possible because in both the ways we have to understand they are uncertain. They are not historical data. They are prospective, futuristic. So they are going to be uncertain. Correct? So now based on that, the answer will be what? 2 and 3. Okay. Okay, for this case study, reading also is not required. You can manage very easily this thing. So the options are 1, 2 and 3. So answer is B. Okay. Also, just will check with the answers given here. Okay, B. So 2 and 3 is the answer correct. Statement 2 and 3 are not true regarding examination of prospective financial statements by CA Anil. CA Anil cannot express an opinion on whether results shown in the prospective financial information can be achieved or not. CA Anil cannot vouch the accuracy of projections while examining the prospective financial statement. Also here, just for your understanding, SAE 3400, examination of prospective financial information. Okay, so a quick understanding of the question here. So it is the case study 25. Okay, question number 2 was there. Answer as we picked up correctly. It is 2 and 3. Okay, it is as per SAE 3400, examination of prospective financial information. We know PFI is what? Future events, completely based on assumptions that are inherently uncertain. Correct? That is the very nature is what they're going to be uncertain. Chartered accountant's role is to provide a limited assurance. That too on what? Not the correctness and on the assumptions. And also whether they're properly been prepared and presented. Correct? Then there is no guarantee of the actual results. We cannot give guarantee because they're future. So here, they do not express opinion on the PFI. They only provide assurance, that too limited assurance on what? Reasonableness and appropriateness of the preparation of PFI. Okay, so reasonableness and appropriateness of the preparation. Reasonableness about assumptions and whether they are appropriately prepared and presented. Appropriateness. Clear? All right. So we have picked up today the 4 case studies, and you must have seen now, as I mentioned in the very beginning, I also made it understandable also to you now that when it comes to audit, okay, don't get very scared of how you actually get for the paper studying because things are too much in detail. But here for IBS, I think the coverage also is very minimal. And also the question pattern is quite understandable now because when you look at the case study itself, you'll be able to pick up. And I think it is not going to be difficult. So you'll be able to handle it. Only thing is your overall understanding of the subject should be very clear. You should understand the applicability of the standards. You should understand the core element of the standard, like core element as in basically what is allowed, what is not allowed, and what is auditor's responsibility in that area. Professional ethics also, basically council guidelines have to be studied properly. I would definitely expect like questions based on the council guidelines or the regulations. Okay? Because clauses basically you test in the main paper, but the guidelines and all definitely could be tested here in the case studies. All right? So case study 7, 15, 22 and 25 with respect to all the questions regarding auditing and assurance, that is basically professional ethics and advanced auditing, all the questions we have picked up, and I strongly believe that you must have understood. All right. If there is a doubt, you can just question me. Otherwise, we wind up the session here. All right. Okay. So with this, we'll conclude our discussion. So the remaining discussion will take up in the upcoming sessions. Okay. So we have another few case studies to be discussed where there are questions on auditing. So we'll pick up them in the next session. Thank you. Hello, dear students. So we are going to now take the next set of the case studies for a discussion. And as we are going to focus on the audit perspective, okay, so we have picked up the case studies where there are going to be auditing questions. Okay, so in the previous class, I've already given you an understanding about the kind of questions we can expect in the context of auditing. Okay, when it comes to IBS. And today also you will see that the kind of questions which I told you or the topics that I asked you to concentrate for IBS, particularly for preparation, you will see that today the questions are kind of those only. Okay, so the case study that I'm going to pick up are going to be 3, wherein there is going to be MCQ also, MCQ kind of questions are also covered, and majority part will be a descriptive questioning. According to the understanding that I have got with the case studies that I went through, in auditing, you can expect descriptive questions more than MCQ. Okay, it's not that it is a study or like it is something which is very acceptable that it is going to be like that, but I believe descriptive have been more questioned. Okay, so yes, for this particular area, we'll see today that many descriptive questions we are going to answer. Okay, with respect to auditing concepts. All right. So now let us pick up on the case study. Okay, we'll have a glance to the case study, then focus on the audit part which is given in the case study, and then solve the question based on it. Okay. So I'll share the screen with you and get started. All right. So we have finished in the previous class the case 25 also. So we are now going to pick up the case study 26. Okay. So I'll give you a quick glance of this case study. All right. So let's pick up on the next one. That is okay. So now we have the case study 26 with us. So this is talking about a company which is engaged in the business of coffee and tea powders. And they're extremely good at their business with all the innovations, with all the quality products, everything. But however, they have tough competitors also. So continuously going for progressing, that is coming up with new products, new innovative products, so to attract the market. So basically, they've given first the history of this entire company. And then there are certain things that have happened, but we are going to concentrate on the auditor's point of view. Okay. I'll have a quick reading of the part. When it comes to audit, I'll go a little slow for us to understand it. So in the bustling heart of Kolkata, West Bengal, lies Mantrupti Limited, an unlisted public company established in 1994. They have carved a name for themselves as a distinguished manufacturer and retailers of diverse selection of coffee and tea powder, catering to discerning clientele across India. I told you they are considered to be one of the famous ones. MTL takes immense pride in its state-of-art processing and packaging facility. They source the finest coffee beans and tea leaves from around the world, meticulously selecting them for quality and freshness. Their rigorous production process adheres to stringent quality control measures, ensuring that every cup of coffee or tea brewed from their powder delivers an exceptional taste experience. It's all talking about how good they are. This unwavering commitment to the quality has not only earned them the trust and loyalty of their customers, but also established them as a leading brand in Indian coffee and tea industry. Okay. In the beginning itself, I told you they have been telling that this is one of the best businesses in the country. Okay. And they're into the business of tea and coffee powders. Understanding the evolving preferences of their customer, MTL offers a comprehensive range of coffee and tea products. Their portfolio encompasses classic instant coffee blends, aromatic loose leaf teas, and delightful selection of flavored varieties, catering to diverse palates and brewing preferences. So basically, they have a variety of products available for the consumers. They are constantly innovating and expanding their product offerings, keeping pace with the current trends and consumer demands. So they're upgrading themselves. With a vision to establish a strong national presence, MTL is actively expanding its distribution network. They are forging partnership with leading retailers and supermarkets, making their products accessible to a wider customer base across the country. Okay. Additionally, they are exploring strategic collaboration and international trade opportunities to broaden their market reach and solidifying their position as a prominent player in the global coffee and tea market. So in India, they already have got their stake, but now they're collaborating with more and more people to get a global presence. Also, India, they're collaborating with others to have a national presence and internationally for a global presence. MTL's ability to source the finest coffee beans and tea leaves from around the world gives them a leverage in negotiating favorable terms with suppliers. Okay, so because of their, the quality and everything, they'll be able to negotiate terms with supplier. And if you negotiate terms with supplier, then your cost of production will reduce. Okay. Their meticulous selection process for quality and freshness further strengthens the bargaining position, potentially enabling cost saving and ensuring consistent product quality. However, the bargaining power of buyer also cannot be overlooked. Despite MTL's reputation for delivering exceptional taste, experiences, and a diverse product range catering to various preferences, buyers still wield influence, particularly if they have alternate suppliers to choose them. So obviously, buyer, if they have multiple options, then it is very important for you to cater them, and one of the ways by reducing the prices. So you have to think the negotiation strategy has to be worked upon. Okay. Therefore, MTL must carefully balance its pricing strategy and value proposition to maintain customer loyalty while safeguarding the profitability. So because buyer has the multiple options, they have to work on their strategy for pricing. Plus, they have to also ensure profit is there. By continuously monitoring and adapting the changes in the supplier and buyer dynamics, MTL can optimize its supply chain relationship and enhance its competitive edge in the market. So all of this is basically their innovation, their improvement, their products, their supply chain. Everything is talking about the company's point of view. Okay, then in the competitive landscape of coffee and tea industry, Mantrupti Limited faces significant rivalry from both local and international players. So there is a competition fierce. With numerous competitors vying from the market share, the intensity of competition is palpable. Established brands as well as emerging players constantly strive to differentiate themselves through product innovation, pricing strategy, and marketing initiatives. So basically, it is a market that they're talking about. All the new players are also having new strategies coming up, new products, innovations, everything. MTL's strong brand reputation, diverse product range, and commitment to quality position it well amidst the competitive milieu. However, the potential for price wars and aggressive marketing tactics looms large, posing challenges to maintaining profitability and the market share. To navigate this competitive rivalry effectively, MTL must leverage its strength, such as state-of-the-art processing facility and customer-centric approach to continuously enhance its offering and brand value. By staying attuned to the market trends, consumer preferences, and competitor actions, MTL can proactively adapt its strategy to outmaneuver rivals and sustain its competitive advantage in the industry. So all that they're giving is suggestion regarding how they can still stand at what position they are, because there's a lot of competition in the market. Now, on July 1st, MTL imported a consignment of coffee beans from Brazil. Through establishing contract with such coffee bean supplier situated in Brazil and negotiating the purchase agreement, including price, quality specification, delivery terms. Both parties prepared necessary documents such as commercial invoices, packaging list, bill of lading, that is ocean freight, certificate of origin, everything. Obviously, all these things are given means obviously GST we are going to be questioned for this. Okay. MTL as a customer broker, Mr. Deval Kali, to handle the clearance process in India, ensuring compliance with import regulations and duties. The bill of entry for warehousing of goods was presented on 5th of July, and the goods were duly warehoused. The goods were subjected to duty at 50% ad valorem. In the meanwhile, on 1st August, an exemption notification was issued, reducing the effective customs duty at 30% ad valorem. Okay, it is from Brazil, right? Yeah, customs duty. All right. Then, Mr. Devlal, on behalf of MTL, filed bill of entry for home consumption on 1st September, claiming duty of 30%. However, Customs Department charged duty at 50%, being the rate on the clearance into the warehouse. Also, the proper officer raised some queries. So this is all regarding the Customs Department. Okay. Further, cost of insurance was not ascertainable from the document submitted before the Customs Authority and by Mr. Devlal on behalf of MTL, relevant for determining the CIF price of the imported goods, which is obtained by making certain additions to the value of imported goods as prescribed. Okay, then MTL is an Ind AS compliant company. It has paid up capital of 5 crore, turnover of 400 crores. It presents financial results for 3 years internally for the purpose of management information every year in addition to general purpose financials. The aforesaid financial results are presented without furnishing the related notes because they're not required by management for internal purpose. Okay. Now, during the current year, management thought why not they should present third year statement of profit and loss also in general purpose financial statement. It will save time and will be available easily whenever management needs to use it. MTL is required to file its financial statement through XBRL, which enables producers and consumers of financial data to switch resources away from costly manual process. So basically, talking about company law here, okay, regarding uploading on the portal through XBRL, taxonomy, all those. Typically involving time-consuming comparison, assembly and re-entry of data, making data readable with the help of 2 documents, taxonomy and instance document. The management of MTL analysis of such additional information, inter alia, observed that there were variances which arise because of inaccurate or faulty standards, not in control of management, and they should not be held responsible for it. Now, further on analysis of such third statement of profit and loss account for the year 21-22, it was observed that MTL had issued debentures in the previous year 21-22, which were to be matured at the end of 5 years. The debenture holder was given an option of one-time upfront payment of 50 rupees per debenture as an interest, which was immediately paid by the company. Okay, this is all regarding accounting here, okay? Okay, let's do the main part for us. Okay, so there is assessing officer and also all this is again taxation based. Now let's read this paragraph. DRT and company are the auditors of MTL for the year ended 31/3/24. The audit report for that year was signed by auditors on 4/5/24. Okay, so the date of signing the audit report is 4th of May. The annual general meeting was decided to be held during the month of August 24. Okay. On 6th of May 24, the company had received a communication from central government that an amount of 300 crore kept pending on the account of incentives pertaining to financial year 23/24 has been approved and the amount would be paid to the company before the end of May 24. Okay. Now, to a query to Chief Financial Officer of the company, Mr. Rajiv Dutt, by the management, it was informed that this amount had not been recognized in the audited financial statements in the view of the same not being released before the close of financial year and due to uncertainty of the receipt. Okay. Now, having received the amount, the management wishes to include this amount in what financial statements of the company for the financial year ending 31/3/24. On 8/5/24, the management amended the accounts, approved the same, and requested the auditor to reconsider this event and issue a fresh audit report on the financial statements for the year ended 31/3/24. So actually speaking, what all we have read, the actual impact on us for audit perspective is going to be this particular part. Okay. So here, if you understand, they have given you the date of auditor's report to be 4/5, which is the original audit report. The date of AGM to be conducted is considered to be 6th of May. All right. Yeah, AGM is in the month of August. Sorry, it cannot be only in the month of May. Okay. So it is August. Okay. So the time period is going to be 4/5. It will go up to August. Okay. Then the company had received. Now what is happening is they're telling you that on 6/5, the company had received a communication from the central government that an amount of 3 crore kept pending on the account of incentive was received. Okay. And they would receive it by the end of May 24. So basically, this has happened after the date of auditor's report. Okay. But before it has been given to the members. Okay. Now they're telling that this year, okay, in the financial statement of this year, it has not been included. But now this event has, they have got to know about it. So this event's impact, they want to reflect it in the current year financial statements. Okay. And the auditor has to come up with a new audit report is what they're requiring. So is this kind of provision applicable or acceptable? Yes. Because you have to understand, we are discussing here about a very simple concept, which is taken in one of the previous questions also. It is regarding SA 560, that is subsequent events. So in case of subsequent events, we discuss about multiple aspects. Events before the, between the time period of 31st March, the date of auditor's report, and then facts that become known to the auditor after the date of auditor's report. There again, we discuss two parts. Before the financial statements are issued, okay, and after the financial statements are issued. Here it is before the financial statements are issued, correct? So here, is there an option for the auditor to, perform the additional audit procedures, okay, and allow the management to, include these matters in the financial statements and then perform additional procedures and check whether it's appropriately disclosed, okay, and based on that, come up with a new audit report? The answer is yes, okay. So now let us look at the understanding here. So it is a descriptive question, okay. Here, question number 7. Analyze the issues involved and give your views as to whether or not the auditor, DRT and company could accede to the request of management. Okay. Now here. So here, these are the facts known to the auditor after the date of auditor's report, which is 4/5. Okay. But before the financial statements have been issued. So as per SA 560, okay, the auditor first have to understand that he has absolutely no obligation, first of all, that he has to look into the matter that has come after the auditor's report date. But suppose he believes that this matter, if I've got to know, okay, before the date of the auditor's report or on the date of auditor's report, this would have an impact on my auditor's reporting or on my reporting. Then in that case, obviously, he cannot ignore the matter. He will then look at the impact of the same on the financial statements. So he will communicate with the management and inform them regarding the kind of amendments that are required or the kind of impact is going to happen. So in that case, you have to see whether the management has done all the necessary changes and the amendments. Then what happens is you as the auditor have to then perform audit procedures which are additionally required for checking all these kind of disclosures or the adjustments. Okay, and then based on that, you can come up with a new audit report. But understand, audit reports dating can never be before the date of approval given by the new financial statements. That is, the financial statements will be amended, then they'll be approved. So after the date of approval only, you can have your audit report issued. So the date of the audit report is very, very important. Okay. So this, as per SA 560, is a question is the question of SA 560. In 560, we discussed 3 important scenarios. This is the second scenario, wherein facts are known to the auditor after the date of auditor's report, but before the financial statements are issued. So is it possible? Yes. The management could request the auditor. Auditor should follow all the procedures given by 560, and then he can come up with a new audit report. All right. So let's quickly look into the answer here. Okay. Look at the 7th one. Facts which become known to the auditor. Facts which become known to the auditor after the date of auditor's report, but before the date of financial statements are issued. So in this context that we have discussed, it is exactly the same situation. Okay. So look at this. As per 560. Okay. As per SA 560, subsequent events, the auditor has no obligation to perform any audit procedure regarding the financial statements after the date of auditor's report. However, when after the date of auditor's report, but before the date of financial statements being issued, if he comes across a fact, which if it would have been known to the auditor as on the date of auditor's report, then he would have caused it to amend the auditor's report. Okay, then what auditor will do? Discuss this matter with whom? Management, and where appropriate with TCWG. Then look at the impact of the same on the financial statements, whether it needs to be amended, and then see how the management is going to address the situation. So if amendment is required, management is required to amend it. Okay, so you have to see whether management has addressed the issue appropriately or not. If the management amends the financial statements, if the management is now making the changes, the auditor shall carry out audit procedures necessary in the circumstances on the amendment. So on the amendments that they have done, you have to apply further audit procedures and check them. Further, the auditor shall extend the audit procedures and provide a new auditor's report on the amended financial statements. However, the new auditor's report shall not be dated earlier than the date of approval of the amended financial statements. So date of the auditor's report can be only after approval by the board of the new financials, amended financials. So they will decide about the amendments, they will make the amendments, and they will be approved. Only after that date will be the date of the new audit report. Okay. So in the instant case, what they're telling is, after applying in the instant case, MTL received an amount of rupees 300 crore on account of incentives pertaining to the year 23-24 in the month of May 24. That is after finalization of the financial statements and signing of the audit report. The management of MTL amended the accounts, approved the same, and requested DRT to consider this event and issue a fresh audit report on the financial statement. So this we have read in the question itself. Now, after applying the conditions that are given in SA 560, that is communication, looking at the impact, ensuring that the management is doing what is required, and if they do the amendment, then applying the procedure, okay? DRT and company can issue new audit report subject to the date of the audit report, which should not be earlier than the date of approval of the amended financial statements. Got it? So basically, all the things that we have studied, the only relevant point for us, for audit point of view, was this particular question where there has been a subsequent event encountered by the auditor during the audit process. And obviously, we know that after the auditor's report, our actually duties over. Okay, with respect to the audit part. Okay, attending general meeting and all is still there. But audit completed, it is completed. But then we know SA 560 cast one more responsibility on us. What is that? That if there is a fact which gets to known by the auditor, which he believes that if I would have known this earlier, I would have done some, the audit report would have been different, or there would be an amendment. Then in that case, obviously, he has to discuss all these matters, understand the impact of the new changes that have happened. And then if the management is agreeing for all the changes, then do the audit on the changes that have happened. And then based on that, you have to come up with a new audit report. That is the understanding. Clear? All right. So that was not very difficult. You have to understand 560, and you have seen previously also we have discussed one question on 560. So one of those which we can expect. Okay, that can be there. Now comes to case study 27. Okay. No, case study 27 doesn't have the auditing question. We'll pick up the next one, that is case 28. Okay. So we have finished 26, that is subsequent events. Okay, this we have already read it now. So 28 is page 311. Okay, so let's get started with 28 now. Okay, this we have to read it properly because a lot of things are there which would be relevant for us. Okay. BL Limited is a biotechnology and pharmaceutical company that is listed on National Stock Exchange. It is a small cap company engaged in research and development, manufacturing and marketing of pharmaceutical formulations and vaccines in India. It has a factory in Vadodara, Gujarat. The company commenced business in 2021. Growth has been steady and the business is profitable. Although in the past few years, the entire pharma industry itself has been growing at a slower pace as compared to the previous years. In the last 1 year, there have been changes in the management. In the previous year, conventional parameters like EPS and share price were used to assess the performance. but now they have changed it and they're bringing up a new model. Okay. So all that is regarding the different models and all. Okay. Let's read from here. Now, look at this part. CA Shirish has been appointed as the auditor for the year 23-24. This is the first year of audit that CA Shirish will be performing for BL Limited. In the financial statement as of March 21, 2024, BL Limited has inventories that are material. Okay. So he's appointed for the first time when 23-24. Okay. And in the financial statements of 31-3, that is the previous year closing balance. Okay. This is the first year of audit that CA Shirish would be performing for BL Limited. In the financial statements as of March 31, 24. Okay. Current year financial statements, BL Limited has inventories that are material. Okay. CA Shirish is attending the physical count of inventory as on 31st March 24, which is obviously supposed to do. However, during the course of audit, he did find certain drawbacks in the internal control related to inventory. Therefore, he wishes to ensure that the opening inventory balance as on 1st of April 23 are free of material misstatement that can materially affect the current financial statement. Okay. Then it has in-house research and development facility within the factory premises. Okay, all that is different. So look, we have to concentrate on this area. So understand it is the first year of audit. Okay. So it is your initial audit engagement, the first time you're doing the audit of this client, correct? So the current year, that is 23-24. As on 31st March 24, you're attending the physical count. So you know very well that time there was a discrepancy in the internal control. So obviously there is a doubt in your mind regarding the opening balance also, because previously also the same way it was done. So there's a doubt regarding a misstatement that could be in the opening balance. You should understand that whether it is there or not there, as the duty of the auditor, okay, SA 510 will become applicable if it is an initial audit engagement. Why? Because if it is an initial audit engagement, okay, then it is the duty of the auditor that he has to look into two things. Whether the opening balances have been properly brought forward and they're properly taken, like they're valued and everything. Second, accounting policies have been consistently applied or not. Okay, they're appropriate and consistently applied or not. Okay, so basically two things become our responsibility. So that is given by SA 510. So even if suppose this was the concern that he got, but even then, if it is an initial audit engagement, this will be an additional standard which will become applicable on you. And you will have a duty as an auditor to have some kind of evidences obtained with the accuracy or maybe the appropriateness of the opening balances. Okay. So with this background, let us see what the question is. Okay. So we have here, descriptive question we have. 7th one. Okay, let's do it. Enumerate whether CA Shirish has any responsibility towards opening balance as on 1st April 23. Okay. First of all, does he have responsibility? Yes. Why? SA 510 casts a responsibility on the auditor. What is SA 510? Initial audit engagement, opening balances. This casts a responsibility on the auditor and gives the auditor an objective that whenever it is your initial audit engagement, first time you're going to do the audit of a client, then you have a responsibility towards the opening balances. Correct? So you have to verify the appropriateness of the opening balances. So that becomes a responsibility. So because of that, do you have a responsibility towards opening inventory? The answer is yes, where SA 510 casts a responsibility on the auditor. What will be the responsibility of CA Shirish in each of the following cases? First, he is unable to obtain sufficient appropriate audit evidence regarding opening balance of inventory. So if he is not able to obtain the sufficient appropriate evidences regarding opening balance, that means in this case, he is not able to perform the audit as required by the standards on auditing. Okay, that is 510 is not able to apply. Meaning he is not able to apply the procedures to obtain sufficient appropriate evidences. Correct? So understand, if you're not able to obtain sufficient and appropriate audit evidences, then based on the pervasiveness of the, statement, okay, you have to take a decision whether you have to give a qualified opinion or disclaimer of opinion. Correct? So obviously, first we are going to discuss this matter with the management, TCWG, and based on that, then finally come with a conclusion whether we can give a qualified or disclaimer as per SA 705. Correct? Then, on obtaining appropriate audit evidence, CA Shirish concludes that the opening balance inventory contains misstatement that can materially affect the current year's financial statements, and these misstatements are not adequately presented or disclosed. So now, second situation, what has happened? You have found the audit evidences. So you have performed the audit procedures, you have found the audit evidences, and these evidences are given you the indication that the opening balance is misstated. So when you communicate to the management and those charged with governance wherever appropriate, you are getting an understanding that the current year financials also will be wrong, because whatever changes they have to do, they have not done it. And they're telling that these misstatements are not adequately presented also and disclosed also. So management has failed to do its part. So based on the pervasive impact of the same, we are going to decide either you have to give a qualified or adverse opinion as per SA 705. Clear? Okay, that's also understandable. Here, you have not obtained the evidence. Here you obtained the evidence. Okay, then. On obtaining appropriate audit evidence, CA Shirish concludes that the current year's accounting policies have not been consistently applied in relation to opening balance, or that the change in the accounting policy is not properly accounted for. I gave you in the beginning introduction itself, and I told you 510 talks about two things. One, about the opening balances, and second very important point is regarding accounting policy, whether they have been appropriately picked up on and whether they are consistently applied as compared to the previous year. And if they're not, then in that case, disclosure has to be given in the current year financials. Correct? So here they're not doing it. So obviously here in this case, based on the communication that you have with management, TCWG, wherever appropriate, you are required to either give qualified or adverse opinion. As per SA 705. Understand, wherever you do all of these modifications, first the communication has to go with whom? Management and TCWG. So you look at this here. Okay, if you look at the answers now. Okay, first we'll read out this one, okay? The two scenarios given to us. Where CA Shirish is unable to obtain sufficient appropriate audit evidence regarding opening balance, he should issue qualified opinion or disclaimer of opinion. Is this point correct now? So he should issue what? Qualified and or disclaimer of opinion as per SA 705, depending upon the circumstances. If he concludes opening inventory is misstated, then he has to come up with qualified or adverse, depending upon the situation. Again by 705. Suppose he's telling accounting policies are not appropriate, not consistently applied, and no proper disclosure also is there, then in that case also you'll end up giving what? Qualified or adverse opinion in the audit report. Obviously, your evidences are found, disclaimer doesn't come. So your evidence is found and you're concluding that. So depending upon the situation and the pervasiveness of the impact, qualified or adverse, and that is going to be as per SA 705. And I told you in all the three situations, first you have to communicate with management and where appropriate with those charged with governance. So in addition, in each of the above situation, as the part of audit procedure, CA Shirish should communicate with whom? Management, and where appropriate, those charged with governance. Clear? All right. All right. So there's one more part which we have to check in here. Okay, this we missed out reading it. Enumerate whether CA Shirish has any responsibility towards opening inventory. Yes, we know he has a responsibility as per SA 510. We have discussed that thing, but they're asking you to enumerate. Enumerate means what is he going to check? Okay, with respect to opening balance. Okay, so in opening balance, you have to see that they are properly carried forward. Valuation has to be checked. Okay, so all of these matters, reconciliation has to do. From closing balance, you can go to the opening balance. Cutoff procedures has to be applied. Okay, so all of these things are the additional procedures that he will be applying for the purpose of ensuring that opening balance is correctly recorded. Okay, so opening inventory, whether it is appropriate or not. Okay, whether the closing balance is brought forward correctly. Okay, then whether valuation of the inventory is done appropriately. Okay, then you can also have the point of reconciliation, that is from the closing. Okay, all the purchases will get reduced, all the sales will get added. Okay, and based on that, you have to come out to the opening balance. That figure has to match. Correct? So reconciliation technique would be there. Cutoff procedure has to be applied to ensure transition gap. Okay, that means to accounting period properly, it has been, bifurcated so that the amount is correctly reflected. So these are all the procedures that he will be applying for the purpose of ensuring that opening inventory is correctly brought forward or not, and it is correctly valued or not. Correct? So for this, the answer would be, the first point is already doing. What is that? Observe the physical count as of the current year. Why? Because he's observing the physical count and he'll be able to understand where are the areas where there are drawbacks. Correct? And already he's doing it. So observe the current physical count which CA Shirish is already doing. Then reconciliation, I told you. Performing audit procedures for valuation. So valuation is correct or not. And the last is performing audit procedures on cutoff and gross profit. Correct? So these are the pointers that you have to write for the purpose of your responsibility as per SA 510. Okay? I think it is a simple one. Okay? So if you look at the notes here, same thing I've mentioned, as per SA 510, the objective of an audit is to obtain sufficient evidence about whether opening balance contain misstatement that can materially affect the current year financials. Okay, so and the audit procedure is the same here. I've just given the information for you regarding cutoff. Ensure transactions are appropriately recorded and transition between two accounting periods is accurate. That is, the break has to happen correctly. The inventory from previous period is correctly brought forward. That is basically copy paste has happened correctly or not. All these things you have to check. Okay, that we study in detail in SA 510. Same pointers you have to pick up on here. Okay, remaining all we have done it correctly. Okay, not a difficult one. Okay, now let's pick up the next one. So now we have the case study 29. Is immediately the next one. All right. This case study is very relevant for us because most of it is suitable for us and most of the questions are for us here. Okay, so we will go very patiently here, very nicely we'll understand and then go to the question bank. Okay. Now, YK and Associates is a reputable firm of chartered accountants with its headquarters situated in the vibrant city of Jaipur, Rajasthan. We're talking about a CA firm, okay? Founded by CA Yashdeep and CA Karan, the firm has established itself as a trusted entity in the field of accounting and financial consultancy. Led by the expertise and the vision of its partners, YK and Associates offers a comprehensive range of professional services tailored to meet the diverse needs of its clients. From auditing and taxation to financial advisory and compliance, the firm prides itself on delivering reliable solutions that drive business success. So you have to understand that it's a firm which is providing multiple services to its client, and they are excellent in their services. With a deep understanding of both local regulation, that is laws, and global market dynamics, YK and Associates serves a diverse clientele spanning across industries such as manufacturing. So they have clients from all areas: manufacturing, hospitality, retail, and more. Whether assisting startup in navigating regulatory framework or providing strategic insight to established enterprises, the firm's commitment to excellence remains unwavering. Okay, so they have exposed themselves all the angles. Explored. Okay. Beyond its professional endeavors, YK and Associates actively engages in initiatives aimed at contributing to local community and promoting financial literacy. Okay. Through seminars, workshops, and pro bono services. Pro bono are like free services or reduced fees. Okay. That's called pro bono services. The firm strives to empower individuals and businesses with the knowledge needed to make informed decision making. So for promotional, they're doing a lot of activities. YK and Associates get their website developed as www.ykassociates.com from Adarsh Tech Limited. So they have their own website. The color of their website was very bright and attractive to run on push technology. Names of the partners of the firm and the major clients were also displayed on the website without any disclosure obligation from the regulator. Now it starts clicking you that they're going to ask you something regarding somewhere you have studied. So they're talking about a website which they have. They're using vibrant colors with push technology. More importantly, they're also talking about mentioning their client's name. Okay, major client's name are given on the website, and no regulator is asking you to do that. In exchange of consideration of developing website by Adarsh Tech Limited, CA Yashdeep accepted appointment as a tax auditor for assessment year 24-25 and commenced the tax audit within 4 days of the appointment, since the client was in a hurry to file return of income before the due date. So immediately started. After commencing the audit, CA Yashdeep realized his mistake. What mistake? If somebody is giving you a tax audit, can you immediately start the audit, or do you have some kind of ethical norm to be followed? You have to communicate with the previous tax auditor in writing, wait for his reply, and only after that you can assume the position. Okay, we do this in professional ethics, correct? So understand, after commencing the audit, CA Yashdeep realized his mistake of accepting his tax audit without sending any communication to the previous tax auditor. In order to rectify his mistake, before signing the tax audit report, he sent a registered post to the previous auditor and obtained the post acknowledgement. Okay, so what he did before signing the audit report, but before completing the audit, what he did, he has sent it. Do you think it is allowed like that? The point is, it is not allowed. Before starting the audit, you have to communicate with the previous auditor. So it is before the acceptance of the audit. Before you accept the client relationship, it is a duty to first inform in writing and then start. So here it has come to an end, conclusion, and now we are informing and getting an acknowledgement. This doesn't make any sense. Okay, so it is not acceptable. Adarsh Tech Limited files an income tax return for the assessment year 24-25 duly on 30th September. The IT department processed the return and sent an intimation. Despite the intimation, the return was selected for regular assessment, for which the notice was served to the company within time limit. Order was passed. However, Adarsh Tech Limited was aggrieved by the amount of income assessed in order passed under regular assessment. So this is all regarding the tax assessing officer judgments and all of those things. Jaipur Municipal Corporation has invited online bids for development of online cloud system for maintaining some vital statistics, including registration of birth and death, within the predefined period as per the contract. The work involved composite supply of goods and services, wherein supply of services was the principal supply. The value of goods constitute 25% of total value of the composite supply. Mr. Arsh, Managing Director of Adarsh Tech Limited, located and registered under GST in Jaipur, wanted to bid for the same. Mr. Arsh wanted investment advisory service from whom YK and Associates for investing the surplus funds of Adarsh Tech Limited, for which purpose he had been invited Mr. Yashdeep for a meeting. In the meeting, Mr. Yashdeep explained the benefits of investing in mutual fund scheme along with its drawbacks, and also recommending investment in X scheme, Purnarth floated by HMKD, plus mutual fund managed by its own. So all of this is going to talk about the mutual fund requirement. The details of such scheme are as follows. So they'll give the details here. Then all this is regarding the same thing. Okay. Further, Mr. Yashdeep is in the business schedule, took some time to attend another meeting. this time arranged by the manager of RFIN Bank, Mr. Ravi, who wanted Mr. Yash's firm to perform an audit of blockchain system, the details of which provided by Mr. Ravi to Mr. Yashji in the said meeting are as follows. So in this bank, there is a blockchain technology being used. So you all must have studied in digital audit concept regarding the blockchain technology, where we know there is going to be decentralization of the ledgers. Okay, so wherein what happens is the system will be broken and all the multiple systems will have the access. So the data will be into blocks accessible to everybody. But the biggest idea here is nobody can alter without the permission of all. So the blocks cannot be altered or removed or tampered. Okay, there is going to be an access which you have to require from all the blocks. Okay, so it is got decentralized system, highly encrypted, highly secure. Okay, and now it was started for cryptocurrency basis. Okay, but now been used for all the multiple activities also. So Bitcoin time it was a famous one, but now it has been utilized by banks and everyone. To perform an audit of the blockchain-based system, the details of which are be provided. Boyniang Bank, headquartered in Chicago, offers a broad range of financial services, including asset management, commercial banking, investment banking, and treasury and security service. RFIN Bank is in partnership with Boyniang Bank, provided a comprehensive range of banking services and products encompassing retail banking, corporate banking, international banking, and other financial service. RFIN Bank has a significant contribution to digitalization of banking service. You can see they're using the blockchain technology, so obviously they are having a contribution. Under the pilot program, the RFIN Bank will open on-chain Nostro accounts with Boyniang Bank branch in the Gift City. The blockchain-based system is expected to facilitate instant 24/7 settlement between the accounts held in the US bank. Essentially, it will create a private infra correspondent banking network, redefining the traditional banking hours and enabling seamless money transfer. So they're operating 24/7 without restricting the banking hours, banking timing and all that, and very flexibility for the customers for the movement. Okay, so they're operating all throughout. Mr. Ravi, the manager of RFIN Bank, gave an order to GM Stores Private Limited on 1st of January 24 for 1,000 custom-made corporate gifts to be provided to their prestigious corporate clients, along with the information about the aforesaid blockchain-based system. On 3rd January 2024, GMSPL purchased raw materials to be consumed in the production process. So it's all regarding raw material, cost. Okay, all this is regarding the costing of it. All right. Consumables. The custom, okay, all they were ready. So all this is regarding cost items. Okay. Now, let's look at the multiple choice questions here. Whether website designed for www.ykassociates.com is in compliance on the guidelines given in clause 6 of part 1 of the first schedule. Now we have clause 6 part 1 first schedule where very clearly we have some kind of advertisement guidelines and everything. Wherein very clearly we study about the Council General Guidelines regarding, that is 2008, regarding website. Okay. So if you have a quick recap of all the pointers that has been discussed there, website idea. So we know that first year the pointers was, what is the option? Yes, website can have the names of the partners and the major client along with its fees. Absolutely no. Council guidelines very clearly says you cannot mention the name of the clients unless it is required by the regulator. And if you are required with the regulator, then you write the names of the clients. Also, you have to mention it is required for the regulation by the regulator. And it is only for the period the regulator requires. Once the period is over, you have to withdraw that also. So first thing is very much wrong because you have written the name of whom? Major clients along with fees. That is not acceptable. Second, you cannot have website on the push technology. Website can be only on pull. Correct? So the website has to be on pull, not on push. So did they comply? Answer is yes. As the website can be designed as push technology, no. The answer has to be no here. It has to be only on pull. Then there is no restriction on the colors used in the website. Yes, the format has not been given. Standardized format is not there. But yes, decency is required. So again, we cannot say they have complied here. But if you look at the last one, no, as names of the major clients were displayed without any disclosure obligation from any regulator. Now, don't you think this is correct? Yes, because I told you, if you look at the council guidelines regarding website, very clearly they mention that prima facie or basically you're not allowed to give the names of the clients. Correct? But sometimes because of the regulatory requirement, because of the requirement of the regulator, you are required to give the name of your major clients. However, in the brackets down, you have to give a very clear understanding that the names have been displayed only by an order or because of the requirement coming from the regulator. And this is going to be for a particular period. So after the period of that order is over, you have to withdraw this also. That means you have to delete this also, remove from the website. So here what they have done is they have displayed the name of the major clients, but did they disclose about the regulator and all of those details and all? No. Point is, no regulator requires. Because in the case study that we have read now, very clearly they're telling that you are giving the name of the major client even when there is no requirement from any regulator here. So because of that, it is wrong. Okay. So the answer here is very obvious, D. No, as names of the major clients were displayed without any disclosure obligation from any regulator. So this is the answer. Correct? Then next. Now, here before signing the tax audit report, CA Yashdeep sent a registered post to a previous auditor and obtained postal acknowledgement. Will CA Yashdeep be held guilty for professional misconduct under the Chartered Accountants Act? So when I explained you the case study itself, I told you that what Yashdeep has done here is absolutely wrong as per the Code of Ethics. Why? Because it is not after you start doing the audit, after you're in the process of the audit, or when you have come to the verge of completion, that time is not the time you have to send the letter to the previous auditor. It has to be when? It has to be once you get the appointment. Then before you accept the appointment, you have to first communicate with the previous auditor, get the understanding from him. Okay, are there any reasons that he can serve us with? So whether to be accepting or not. See, the very requirement of the clause is what? So the clause 8 of the part 1 of the first schedule. Why such clause have been included? The idea behind it is very simple. Idea is what? The previous auditor will be able to give you insights which will help you decide regarding your further procedure that you have to adopt or further course of action. So the very purpose of the code of ethics, the norm which is there, is eliminated. So because of that, at the verge of completing, if you're asking, then it is going to be wrong. So are you guilty here? Yes. Which clause? Clause 8 of part 1 of the first schedule. Now, if you have a doubt regarding tax auditor, where this is applicable to statutory auditor, you should be very clear in your understanding that this particular clause is applicable to every type of auditor. So the point is, tax auditor has to communicate with the previous tax auditor. Internal auditor has to communicate with the previous internal auditor. GST auditor will communicate with GST auditor. Concurrent auditor will communicate with concurrent auditor. Statutory auditor obviously has to communicate only. So do not have an idea that it's only for statutory auditor. It is going to be for any person who's take up this, provided you are a chartered accountant in practice. Okay. So you are a chartered accountant in practice, and now you have come up with the position of tax auditor. But this position was held by another CA. So now it is your duty that you communicate with him, understand, and then only take up the audit assignment. So is it applicable to tax audit also? The answer is yes. So here, this is as per clause 8 of part 1 of first schedule. Yashdeep is not guilty, wrong. You're also not guilty, wrong. Yes, so third answer is what? As per clause 8 of the part 1 of first schedule, he is guilty because he has accepted the tax audit without first communicating to the previous auditor in writing. Okay, and here it is second schedule, so it doesn't come in the second schedule. Clear? So the answer here is very clearly C. All right, okay. Okay, so this is GST questions. Okay, descriptive questions that we have. Yeah, there is also a question on audit here also. So in connection with RFIN Bank and Voynich Bank, provide some illustrative steps for performing audit of the aforesaid blockchain-based system. Okay. So now you have to think very clearly and first understand what is blockchain, right? So basically blockchain, as I told you in the beginning, a decentralized approach. Unlike the traditional centralized approach where everything will maintain at one area or one network only or one system only, and only one particular office will have the access to everything. Unlike that, now it has been gone through multiple systems. So these are considered to be nodes. Okay, but all the places, everybody will be having the access to the data and they will get a complete exposure to all the information. But here, tampering, alteration, everything cannot happen. You cannot remove a particular data. You cannot add on without, there has to be a proper process going on. Basically, here it is going to focus on transparency. Where what has been added, where what is getting eliminated, everybody will get an access. So if you want to tamper any data and all, then you require the permission, the consent coming from each and every block system here. Otherwise, it will not be allowed to you. It is like that. So basically, in order to facilitate kind of transparency, okay, reliability of the data, no tampering of data, accuracy of the data, validation, all of these things, we have this kind of concept of blockchain. Okay, and this technology started for the purpose of Bitcoin, the cryptocurrency, but over a period of time, because of its usage, the encryption, the security system, the reliability, the transparency, okay, it has now been utilized by all the other sectors also. Okay, so here they're telling you what would be the illustrative step for you. Okay, now we read all through the way in which they have started it. So RFIN Bank is using the blockchain technology, and they are entering into agreement with whom? The Voynich Bank, and they're collaborating together and giving all the facilities. So they're asking you to check whether the aforesaid blockchain system, how it is performing. So first thing we need to understand that provide some illustrative steps for performing audit of the aforesaid blockchain-based system. So first thing is you have to understand the entire system. The first thing is the system only you have to understand. So you have to get a comprehensive understanding of the scope, objective, functionality of this blockchain system. So first is objective, scope, everything you need to get. Then obviously these two banks will have entered into some agreements. There are going to be some kind of documents which they have signed together. So these review will be doing it to understand all the requirements and all the terms and conditions. Then internal controls, as the regular audit also we do. So all the internal controls operating here to see whether things are, all the functionalities are operating, whether they're adequate, okay, they're operating properly, okay, for the reliability of data and all. Then you can do the validation checks. That means whether what system has been ensured to provide, whether it is really happening or not. So basically, when you talk about validation, is that you put an input data and see the output as you're expecting is happening or not. Because they're telling 24/7 it is operating and all. So you try to give some input validation data to check whether it is really happening or not. Okay. Or sometimes we have a validation check. Some kind of data input they don't take. That is what the technology says. So you try to input and check whether it is really happening or not. So input validation checks you can do. Then you can also look into the security system, because it's all data. It is all technology. So there has to be highest security standards to see that the data is not lost, the data is maintained, the data is secured, the data is not tampered, it is reliable, everything. Also, because of this data being on the virtual media, you should have a proper backup plan. That means business continuity plan, disaster recovery, all of these planning has to be checked. So you have to check whether this company actually has a proper disaster management program or not. Okay, so or any in the history, is there been any situation and how they have reacted to it. Okay. And finally, as an auditor, you have to prepare the audit report and tell about any discrepancies that you have found. And based on that, you have to give a reporting regarding your recommendations. Okay. So the illustrative steps for performing, I think all these points will be quite sufficient to mention. So let's look at the answer now. All right. So look here. Let's see if all the points we have covered. So how are you going to perform the audit here? See, first you have to get the comprehensive understanding. Okay, every audit we do that. First you have to understand the entity and all that. Also understand your technology functionality. You have to understand what kind of technology they're using. So comprehensive understanding you have to get of the objective, the scope, and the key processes. Then there is a relationship between the bank. So they are going to have documents. So you have to review the partnership agreement, the contracts, and all the legal documents that they have entered into. Then try to understand the kind of technology that they're using. So blockchain technology, what kind of it is? What are the functionalities? Basically, the features of the technology you have to understand. Then look at the internal controls. And what are internal controls? Are nothing but policies and procedures. So you have to assess all the policies and procedures that are connected here. Okay. Then all they required for money transfers and all that, right? Instant and all, settlement process and all. So whether internal controls placed there are appropriate or not. And internal control remaining components are what? Governance structure, risk management policies, compliance, monitoring, all of those things, whether they're there or not. Then I told you it is the data which is very heavy here, so security system has to be strong. So next one is what? Review security measures. Okay, security measures means what? Assess encryption methods, cryptographic key management, secure transmission protocols used for data protection. All this you'll be able to understand if you have done digital audit as a topic correctly. Okay, so encryption methods, cryptographic key management. So basically the data is highly secured, highly encrypted. So you need to understand all of these and how data is getting protected. And obviously no cyber attacks. So prevent unauthorized access, cyber threats, potential vulnerabilities and potential threats that could be there. So a study of all of that has to happen because to understand the risk that is involved. Then transaction validity, I told you, you have to look into the transaction validity, whether it is really operating the way they're telling it. Perform reconciliation, okay, to check whether what has been reflected is appropriate or not. Then compliance with laws and regulations, so documentation procedures, and see that they have all the industry best practices. And because the data is subjected to, losing it and all, then you have to look at the business continuity and disaster recovery. Okay, so BCP planning has to be there. If suppose that is not available, then see that in the history, if there has been any kind of breakdown like this or data corruption like this or data loss like this, then in that case, how they have reacted to it. So did they conduct a simulation, examining historical incidents and response procedures? How did they respond it? And ultimately, as an auditor, you have to report your finding and give recommendation. So they're saying provide recommendation for improving internal control, security measures, compliance procedure, and overall efficiency and effectiveness. So this is what you have to give the understanding regarding your reporting. And this report should be given to every stakeholder who would be interested in understanding this thing, along with the remedial actions. Correct? So this is the procedure that you have to mention. See, what I would recommend is you need to understand the concept of blockchain here. Second, once you understand that, your basic understanding of SA 315, if you put in here, to understand first regarding the entity, the environment, okay, then the kind of technology, okay, all of these things, risk assessment that you're doing, you are able to bring up those pointers, and then the further audit procedure that you're going to apply to assess this risk. If you're able to recollect and correct in that matter, I think you'll be able to handle this kind of thing. Obviously, all these pointers cannot be expected to be remembered in one go, but yes, a flow of system has to be there. So if it is a technology, you have to understand that first. You have to understand the reason why the technology has been implemented, so scope, objective, and all. Then it is in partnership here, so review all those documents. What kind of technology has been used, the functionality of that, so the features of the technology has to be taken care of. Then security standards have to be very high because it is a software, it is a technology. So high security standards have to be there. Internal controls have to look in all area. That means internal controls are nothing but policies and procedures. In every area, it has to be proper. Plus governance structure, risk management, all of these things, whether they're placed or not. Then you talk about security measures. Data should be highly encrypted. Okay, the data protection has to be there. All the cyber attacks and all, these should not happen. So you have to check for all these kind of possibilities. The transaction validity and accuracy, that is what has been quoted by the technology, is happening or not. Reconciliation you have to do because both the accounts which are being managed by both banks have to match. So reconciliation has to happen. Regulatory requirements you have to follow and see that industry specific standards have been followed. And then finally, your duty is to prepare an audit report and give the recommendations. Correct? So that is regarding the list that you have to do for the performance of your audit. All right. Now, so that is it for the 3 case studies that we have taken. Okay, just I'll take you quickly through all of them. So I took it to case study 26, where the question was regarding subsequent event. And we discussed about the concept of facts that are known to the auditor after the date of auditor's report, but before the date of financial statements, where we know that you have the responsibility first, no. Second, what you believe if it is important, then you're going to communicate with management, TCWG, understand the impact on the financials, discuss this with the management. And if the management agrees to make the amendments and all, then in that case, you perform the further audit procedures to check the amendments and come up with a fresh report. Okay, Then we discussed about 510, that is initial audit engagements, opening balances. You have the responsibility over you towards the checking of the opening balances. So there, obviously, they've given you multiple things that you observe the current year physical count, do the reconciliation process, check the valuation. Okay, also perform the procedures like the cutoff, the gross profit cutoff, and all of you to check it. Okay, then they've given you 3 different scenarios where all the places we end up either giving qualified or disclaimer of opinion as per SA 705. And everywhere you have to first communicate with the management and TCWG. Case 29, I told you, much more important because a lot of questions were covered here. So your council guidelines was regarding the website. So we know all the provisions regarding website. So one of it which was not satisfying here was regarding the name of the clients without regulators requirement. Okay. Second, here it is about without first communicating to the previous auditor, you have accepted the engagement, which is again wrong because clause 8 of the part 1 of the first schedule does not allow you that. It is not only applicable to statutory auditor, but every auditor for that matter. If you are a CA in practice, taking a position of the performance of a audit, which is first held by somebody else, then in that case, you have to first communicate. Illustrative steps, I told you, they're not hard and fast things that you have to remember as it is. But then I told you have to keep in mind the risk assessment thing. And based on that, you have to bring an understanding of how we are going to assess the blockchain technology, which has been adopted by the client. Okay, so in that case, we say about you get an approach of scope, objective, everything. Then you understand their documents, you study their legal agreements, you study their contracts, partnership agreement. Then we discuss about you understand the kind of technology that they're using. Because technology risk is going to be with regard to security measures you have to check. Correct. Then there has to be all the other methodologies adopted to understand the kind of security measures, like it should be highly encrypted. Okay. Then prevention from unauthorized access, internal control assessment has to happen, understand the governance structure. Correct. Understand regarding the risk management policies. All of these things you have to take care of. Correct. Ultimately you can do validation checks for that matter. Okay. And finally, we know that it is our duty now to report our findings, and you have to give all the recommendations that you want to give regarding the deficiency or wherever you require improvement. And this has to be addressed to every relevant stakeholder who would be interested in this, along with remedial actions. Clear? So that is regarding what? All the 3 different types of questions and different type of case study that we have come across. Okay, we have another set left, which we'll be taking up in the next session. Okay, all right. Hello, dear students. So here we are going to take up the next case study for a discussion. So that is the case study number 30, where we are going to discuss on the auditing point of view. Okay, so we have a very interesting descriptive question here, which is going to talk about the ethical norms, and a question which is very interesting to answer and to interpret also. Okay, so I'll share the screen with you and then then start the discussion regarding the same. Okay, all right. So here we have this question number 30, that is case study 30. Where we'll first take up the understanding of the question, which is relevant to us. And based on that, we'll read the part of the case study, which would be relevant for our discussion. Okay. So as I told you, it is the question number 6, which is the descriptive question, which is relevant to us now. Okay. So look at the question here. Okay. Discuss the potential ethical conflicts, okay, which may arise in respect of the lease arrangement and the ethical principles which would guide how the finance manager, Mr. Karthik, should respond to the situation. Okay. Believing that you must have gone through this question at least once in at least one of the case study discussion or the scenario discussion, okay, or with respect to other subjects, I believe you have a little understanding of the entire case study. However, as of now, we are focusing on this particular question where the discussion is regarding the finance manager, Mr. Karthik, who has been newly appointed, okay, for the purpose of conducting a review for the upcoming audit and also assisting the entity to apply for a loan application, okay. So here, based on that, some content has been given, which we will go through now. And based on that, try to understand, is there any kind of potential ethical conflict? And then we are going to talk about ethical principles, which have been reflected here and where there is a compromise on the same. And also they're telling us, how should he respond to the situation? So understand the question, discuss the potential ethical conflicts. Ethical conflicts is independence if there could be a threat. That is one of the ethical conflict. Second, it's a discussion regarding the lease arrangement. So obviously, we are going to jump a little bit into accounting also, financial reporting, and discuss a little about Ind AS 116 to understand about the arrangement which would be appropriate in the given circumstances and what is the pressure created on him. And then which of the ethical principles, so we know by code of ethics, we have fundamental principles governing the auditor or a chartered accountant. Is any of that getting compromised here? And based on that, how he is supposed to react to the given situation? That is the question. Okay. So now let us read the relevant part for our discussion. Okay, so from here. So this part will become relevant for us. CA Karthik, see from here it is. A new finance manager, Mr. Karthik Desai, a chartered accountant, joined WDG Limited before the financial year ending 31st March 24 and was engaged in the review of the financial statement to prepare for the upcoming audit and begin making a loan application to finance the new technology. Okay. So basically, he's doing two things. One is conducting a review so that the financial statements are ready for audit. Second is helping them in preparing for a loan application. Okay. They have a new technology upcoming for which they require an investment to be done, for which they're applying a loan. Okay. So to make this loan application, he's assisting them. CA Karthik believes that the lease arrangement should be recognized in the balance sheet. Okay. However, the managing director, Ms. Tina Diwan, an MBA, strongly disagrees. She wishes to charge the lease rentals to the statement of P&L. Okay. Okay. Here on top, they have shown they have taken a particular machinery. Okay. But it is not even being shown as a lease asset or a lease liability. Okay. Now, why it is not shown? Because Tina strongly disagrees to the same. Okay. She wishes to charge the lease rentals to the statement of profit and loss. Her opinion is based on the understanding that lease arrangement is merely a monthly rental payment without any corresponding asset or obligation, since there is no invoice for the transfer of asset to WDG Limited. So her conviction or her understanding is there is no invoice available. So because of that, it should not be shown as an asset in the balance sheet. Okay. So all of these things is what she's trying to tell. And she believes that lease rental is not an obligation as a liability and all. It is like an expenditure, like how we have a regular rentals to be paid. She's considering lease also to be a regular rental, which she also charged to the P&L account. Her disagreement also stems from the fact that showing lease obligation in the financial statement would impact the gearing ratio of the company, which could have an adverse impact on the upcoming loan application. So basically, she's also understanding that if this kind of obligation is shown in the financial statement, then what would happen here is this would have an adverse impact. So there would be a more of liability shown, which would definitely impact the application that they are submitting to the bank for the purpose of loan. And they have a fear that the loan would not be sanctioned. Ms. Tina has made it very clear to CA Karthik Desai that at stake is not only the loan application, but also his future prospects at WDG. So you can understand she's trying to speak in a language where she's telling loan application is not only the problem, but also whether you will continue in the organization or not will also become to a question mark now. So he's trying to threaten him. Okay. Okay, so that is the only thing would be relevant for us. Okay. Now, based on that, first of all, try to understand here the concept is coming regarding lease. And here the understanding regarding the manager, okay? Managing director, Ms. Tina, regarding this particular lease arrangement, do you think is it valid as per Ind AS 116 or it is wrong? The understanding very clearly here is the understanding that she is giving here with respect to charging it to the P&L account as a regular rental
okay, and then not showing it as an obligation, not recognizing it as an asset because there is no invoice, all of these will absolutely not be correct with accounting point of view. So because of that, there is a breach of Ind AS 116 here. So it is the duty of the chartered accountant here that he has to understand that the requirement what they're asking them to do is going to be against his professional competence. Okay. So being a chartered accountant by the code of ethics, he is required to act, okay, with integrity, objectivity, and professional competence. Competence as is he has to apply the knowledge in the right direction. And where what has to be reported as per the requirements of law, financial reporting frameworks, that is the way he's supposed to record it. So following the accounting standards, following the Ind AS for the preparation of financial statement comes as a very much part of his professional competence, which he cannot compromise. So here, what would be the idea of reporting? So what he is telling is appropriate here, because as per Ind AS 116, what we understand is, if there is any arrangement by the company, or if there is any agreement where it contains a lease arrangement or there is a lease involved, then in that case, you have to understand that the right, okay, to control the usage of the asset will be recognized as an asset. Okay, so basically right to control the use of the asset when it is given for a very long time in exchange of consideration, then that will be termed as what? Lease. Correct? So in the asset side, what you'll be having is you will be recording a right to use asset as a property, and on the other side there is going to be a lease obligation. So there is going to be a liability created. Okay, when you look about the right to use the asset as a property which is recorded as an asset which is recorded, it is going to involve all the initial cost. It will have the initial direct cost involved, all the future replacement or dismantling cost that you require to restore the site. Everything will be taken into account and an asset will come into picture. On the contrary, on the liability side, you have to calculate the present value of the lease rentals, future lease rentals at the appropriate discount rate. And based on that, you'll come to a liability and that has to be recorded. This is very clearly explained in Ind AS 116. So don't you think the chartered accountant, okay, who understands all of this and who's correct in this discussion should not listen to Ms. Tina here? Because what she's telling is not as per the understanding of the chartered accountant and he cannot compromise on his professional competence. So in this situation, the way he's going to react is that he has to talk to one of the appropriate internal managers or somebody who's at the top there regarding the situation and then understand how it has to be taken care of. So he has to do the reporting about the same. He simply cannot listen to what the manager is telling or the managing director is telling because this is wrong. He's compromising on his professional competence, which is wrong. Second important thing here to understand is they're talking about ethical requirements. If you look at ethical requirements, there are two threats which are getting identified here. One, you must have understood with the discussion itself that they're talking about intimidation threat because she is telling him that his future prospects will also come to a problem. So pressurizing, intimidating him to act according to her direction is going to create which threat? It is going to be intimidation threat. So there is intimidation threat. Plus, along with that, understand, there is going to be a loan application made. Okay, you're applying for loan to the bank and you require the loan to come to you. And because of that, Ms. Tina is very, very, clear that the projections have to be shown in such a manner or the presentation should happen in such a manner that it shows that company is doing very good. Okay, so no adverse gearing ratio and all that should be shown. So in that case, don't you think you're trying to promote the client of yours or maybe the employer of yours in a way that you're showcasing them to be good? So don't you think you're trying to defend themselves so that they get the loan application or the loan gets approved? Correct? So in this case, don't you think that there is going to be an advocacy threat applied? Yes, because you are trying to portray the picture in such a manner so that the loan will get sanctioned, so that the loan application is approved. So you're defending the employer in the way you're not supposed to do by compromising on your objectivity. Okay. So because of that, understand there are two ethical things highlighted here. One is intimidation threat. Second is regarding your advocacy threat. Understand both. Intimidation is quite simple here. Threatening has been happening. Second is because they are telling you that they require this for loan application has to be passed. So in order to promote the requirement and in order to any which way get the loan, okay, you have to project an information which is very favorable. So you are trying to defend your employer, promote the employer in the eyes of the banker. So don't you think for this purpose you're compromising on something which is important, objectivity? So this is nothing but what? An advocacy threat. So ethical requirements are two here. That is ethical norms which are getting breached here are two issues which they have to tackle. One is intimidation. Second is advocacy. Also understand both of this pressure is even more stronger because the person is new in this organization. So these are going to be even more danger. The pressure is created will be even more stronger. And third, they talk about the fundamental principle, which is going to be focusing on professional competence. So your professional competence, that is what as per his knowledge should be reported, should be the way it is which it is reported. He should not listen to something which is wrong in reporting aspect. He should not compromise on the knowledge that he has, the professional knowledge that he has. He knows how it has to be applied. He knows the applicability of Ind AS. He knows how the preparation of financial statements have to happen in the situation. They should be in accordance with the Ind AS. So if you're not going to follow that, you are going to violate it. There is going to be contravention, correct? So don't you think you'll be guilty of professional misconduct also? Under which clause? It is going to be the clause 1 of the part 2 of the second schedule. Why? Because a chartered accountant, whether in practice or in employment, okay, will be guilty of professional misconduct if he does not adhere to what? Any of the accounts of any of the provisions of the Act, rules, regulations, or the guidelines issued by the council. And one of the guidelines is what? That he will be grossly negligent if he does not do the work as required in the given situation. Correct? So all of these things you pick up here. So first thing is regarding threats, ethical issues. And second question is regarding fundamental principle. And that is nothing but what? Professional competence highlighted here. And because of this, obviously, there will be a threat of you being guilty under clause 1 of part 2 of second schedule. Okay, that is the way you have to understand. Now, what all we have discussed, all that we have taken through, let us look at the answer given so that the understanding is very, very clear. Okay, so first, as I told you, discussion is regarding 116. Look at this. As per Ind AS 116, lease at the very inception, you have to understand that when there is any contract which is an indication of a lease or an arrangement which is a lease, or it contains a lease, then you have to understand, see whether it is giving a right of controlling the use of an identified asset for a particular period of time in exchange of consideration. If that is what is happening, then that particular arrangement, we call it to be what? Lease. And therefore, once you define it to be a lease, it has to be recognized in the balance sheet. So one, there is going to be an asset created, and one, there is going to be a legal obligation that is going to be a liability. In accordance to the above definition, WDG Limited must recognize the right of use of the asset representing the property, that is asset, and corresponding liability for the obligation to make a lease payment. So one asset is recorded, right to use. Second is what? A lease payment. That is going to be an obligation. So one asset, one liability. Now, then they have given you the calculation of the costing. That is how it is going to be. The initial measurement cost, any initial direct cost, and all the other costs that you require later for dismantling or restoration of the site. All of that has to be taken. And when you talk about the obligation, that is the liability, then in that case, we take the present value of the future lease rentals at the appropriate rate. So all that is given as a point of Ind AS 116. Now here, when Ms. Tina is pointing out that there is no invoice, so we are not recording it as an asset, it has to be only shown as an expenditure, is absolutely not making sense here. Reason is very simple. This is lease arrangement and not a purchase of asset. Are we purchasing asset here? No. But because we are getting a control on the use of the asset for a particular period of time in exchange of consideration, then by Ind AS 116, we are required to show it in the balance sheet. Okay, it is a requirement of the standard. But we are not purchasing it so that you require an invoice based on it. So the agreement, the arrangement, which is giving you the control of using it for a period for exchange of consideration, that is these rentals, by Ind AS, you're required to show it as in the balance sheet. So this point of not having an invoice doesn't make any difference here because anyway, we are not purchasing it. There is no sale happening. There is lease, correct? So the fact that there is no invoice evidencing transfer of asset cannot be the reason to avoid recognition of the right of use. In fact, what has been recognized is not an asset. Obviously, we're not purchasing it. We're recognizing what? What is sought to be recognized in Ind AS 116 is the right to use the asset in the manner as lessee is permitting. Okay. Further, since the lessee, the way in which has the control, since the lease represents an obligation to pay lease rentals in the future, a corresponding liability is also to be created. So if you do not create a right to use as a property, or you do not show a liability as a legal obligation or a lease obligation, then in that case, you will be violating Ind AS 116. And also there will be incorrect presentation of the financial position, correct? Which in this case is going to be very bad because you are applying this to whom? Banker for the purpose of obtaining loan. So your incorrect presentation of financial position to whom? The bank. Okay. Now, what will be the ethical issues here? Major ethical issue is the pressure is going to be very, very high because he is new in the organization. Okay. So they say the managing director, okay, the managing director's threat to financial manager results in ethical dilemma. Okay. The pressure is even greater because he is new. So two fundamental principles, two fundamental threats have been brought here. Threats to independence. One is there is intimidation threat, you can see here. Second is going to be advocacy threat. The fact that the position of the financial manager has been threatened if the treatment suggested by the managing director is not followed indicates that there is intimidation threat, okay, which is obviously going to compromise his objectivity and integrity. Further, as it has been telling that if you show this, then we might not get the loan arrangement. So because of that, please show it in different manner. So somewhere they're taking your assistance for promoting the client or promoting your employer in front of the bank. So which threat is there? Advocacy. Understand further, as the managing director has flagged the risk that the company may not obtain the loan financing if the lease obligation is recorded in the balance sheet. There is which threat? Advocacy threat, because financial manager may be compelled to follow an incorrect treatment to maximize the chances for getting the loan. Maximizing means what? You're trying to promote the loan, promote the employer in order to get the loan. This pressure again is greater because the finance manager is what? New. So ethical issues are clear to us. That is through threats to independence, one intimidation, other is advocacy. Then which fundamental principle is getting compromised here? Professional competence. Now, when preparing financial statement, the financial manager should ensure that fundamental principle of professional competence should be followed, which requires that the account should be prepared in accordance with what? Ind AS. Thus, since the arrangement meets the Ind AS criteria for lease, the right of using the asset and a corresponding lease liability should be recognized. As otherwise, the liability of WDG would be understated, because if they're not showing it as a liability, it is going to be what? Understatement. The ICAI Code of Ethics and Conduct sets the boundaries beyond which an accountant should not act. If the managing director refuses the application of Ind AS 116 leases, the finance manager should disclose it to an appropriate internal governance authority and thus feel confident that his actions were ethical. So I told you, obviously, if he's not okay with the recording of transactions or the way it has been reported, he simply cannot accept it. What he has to do? Internally, he has to talk to one more level of governance and tell them about the situation and feel confident that he's acting what? In a very ethical manner. If the financial manager were to bend under the pressure and accept the managing director's proposed treatment, this would contravene Ind AS 116, that is obvious because he's telling to charge to P&L, and breach the fundamental principle of professional competence. In such a case, he would be subjected to professional misconduct under clause 1 of part 2 of the second schedule. Okay, and which states that the member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any provision of the act, regulation made thereunder, or any guidelines issued by the council. And as we already know, as per the guidelines issued by the council, a member of the institute who is in employment shall exercise due diligence and shall be grossly negligent in the conduct of his duty, and shall not be grossly negligent in the conduct of his duty. Grossly negligent means what? Where he knows things are wrong and he's still allowing it to happen. Then don't you think he's negligent and grossly negligent? Yes. So here there is contravention of a guideline or a council guideline issued by ICAI. So in this case, don't you think he will be guilty of professional misconduct? Yes. Under which clause? Clause 1 of the part 2 of the second schedule. All right. So this is one of those questions where they have told so many things. Okay. About lease, you have to read the question from the beginning so that a pointer has been given there where they have taken an asset. Okay. Once you understand that, and then you look at the treatment suggested by CA Karthik, and then you see the conflict which has been created by the managing director, you will realize that Karthik is actually correct in the given situation. CA Karthik is correct in the given situation. He's talking in compliances with Ind AS 116. His understanding is correct. He's acting with professional competence, okay? And he's suggesting the right approach. However, he's been pressurized, he's been threatened, and he's asked to promote by giving an incorrect picture. So there are two threats identified here: intimidation threat and advocacy threat. Moreover, by professional competence of the fundamental principles, he is required to understand what kind of competence he needs to apply in the given situation. Here, because it is regarding the financial reporting, he requires to understand it has to be compliance of Ind AS 116 here, because it is leases. So in that case, it has to be shown as an asset and a liability. However, because it is not happening, there is a contravention here. And if suppose he, under the pressure, he agrees to it, then don't you think after knowing that it is wrong and he's still assisting them to show it, then he'll be grossly negligent in his conduct? Yes. And we have a council guideline which says very clearly, a member, okay, who's in service, okay, if he acts, he also is required to do what? Exercise all his duties with due diligence and should not be grossly negligent. So here, because he's grossly negligent, then obviously there comes the clause 1 of the part 2 of second schedule, which says whether you are in practice or not, okay, you will be guilty of professional negligence, okay, or misconduct if you contravene the provisions of the Chartered Accountants Act, regulations, rules, and even the guidelines issued by the council. So here there is a contravention of a guideline, and because of which here he will be guilty of professional misconduct. Is the point very clear? So we need to understand the question is completely based on the code of ethics, the fundamental principles, and also regarding the threat to independence. Clear? All right. Least part is based on NDA's discussion. Yes, it was relevant here. So obviously the discussion has happened. Otherwise, the most important part here that we have discussed as a part of auditing is regarding what? The threats and regarding the professional competence as a fundamental principle. Clear? All right. So this is it regarding the case study 30. So quickly we'll see through the summary that we have created here. So it is a descriptive question. So here they have told you it is in days 116. Okay, same things at the inception of a contract. The entity shall assert whether the contract contains a lease. How to understand it? It gives the right to control the use of an identified asset for a particular period of time in exchange of consideration. So here, obviously, there is a right of use, which has to be shown as a property, and correspondingly, a lease liability has to be recognized. No invoice doesn't make any sense here or does not make any difference here because there is no ownership to be transferred because there is no purchase of an asset. Okay. So because you're not recognizing it as a right of use asset or not showing a lease liability or any one of them is missed out, then you're violating Ind AS 116. Okay. Because it is a wrong presentation of the financial position. Okay. And also it is a wrong presentation. Ethical issues would be 2 year intimidation threat and advocacy threat. Okay. Intimidation because pressure is created on him and he's been threatened of being removed. Advocacy because they're asked to give it in the loan application, which is required for obtaining the loan. Okay, so you're showing incorrect picture to a third party. Okay, promoting your employer. So that is going to be advocacy threat. Fundamental principle getting compromised here is professional competence because you know the real thing to be done, but you're supporting the wrong. So if you do that, it is going to be a professional grossly negligent in your professional duties, and you'll be guilty under the clause 1 of the part 2 of the second schedule. Clear? So that is the way you understand this case study 30 with respect to this auditing discussion. Okay, it's basically professional ethics. All right, yes.